Good morning, students. I hope you all had a good learning last time, and I'm sure I was able to entice a lot of questions, a lot of thought process, and also curiosity in our subject. Now, the topic that we are going to start today is, you can say, now the extension of whatever we have studied in our first day. Now, in this particular case, I'll just take you to my screen of the first day so that we can link to what we have been studying and where we are going to reach. So, our previous session was on introduction to the concept of costing, cost accounting. We studied so many concepts. We did so many thought-provoking discussions on cost, on costing, cost accounting, cost and management accounting. And then this session culminated into our final cost sheet, if you remember. And this cost sheet, from a very basic, we also reached to the technical format of the cost sheet. And alongside, we had some discussions on the linked concept of manufacturing account, trading account, etc. Now, I would like to take you from this step ahead. Now, in this particular case, last time when we were discussing, I had said that we are taking example of manufacturing sector. So my output would be definitely products, that is goods. And then we had this concept of cost object, cost unit. Cost object is your product, your service for which costing is done. So it was your dinner. And cost unit is the quantity in which your product would get sold, so that you need to calculate, you need to express the cost for that unit. So in our case, it was you, that is one person. So our costing was for one person's dinner. It could have been family's dinner. In that case, the cost unit would have been family. Now, when we saw this cost sheet, and if you could remember, we derived it from our very basic example, and where we discussed the concept of elements of cost. That is, cost is broadly made up of so many elements. And the first and the major element of the cost was materials. And this is even major when we talk about a manufacturing sector setup. In a manufacturing setup, the material which will be appearing in two parts, one is direct material, and the other one which is indirect material, which will be majorly part of production overheads. It will be appearing here in your production overheads. So this material element, this material component is the major cost out of all the entire cost details. The major proportion, the major component of cost is always this material. Now, what we are going to study henceforth is, as we discussed last time, the three major components of cost is the material component, then the employee or the labor component, and the cost relating to your facilities, your assets. So it is depreciation, it is the renting, it is the insurance, maintenance, etc. Now, this is the next few chapters of your syllabus, which is the discussion on each element of cost. So today we are starting with the major element of cost, which is mainly major whenever you are into the goods production, because whenever it comes to service, generally the material component would be lesser, and these two components, the labor and the facility, would be higher. So let me take you to our materials chapter. Now this is our module. I would request students to religiously follow the module. And now the best part is, the module at the start has all the details, in-depth concepts, and every explanation of the topic. Plus, towards the end, we have the let us recapitulate section, which gives you the summary, the revision of everything. Now, in this material chapter, this is the overview of the chapter, but I would take you to my own overview. When we see materials chapter, or rather for any element of cost that we are going to study, whether it is employee or whether it is the expenses, that is overheads, you will find that every chapter broadly covers three aspects. Yeah. So the first aspect that you study in all these elements, that is material, employee, labor, and the expenses and overheads, you will find that the first component is the accounting. Because our topic is not only costing, it is cost accounting as well. So now we have to study the costing component and also how it would form or appear in your books of accounts. That is the cost books of accounts, not your regular financial books of accounts. So we'll see the accounting aspect. Then we will see the charging aspect of how material cost is charged. This is where the costing component comes. So you can say this is the cost accounting, this is costing. And then we have another component, which is the control component. So in material, labor, and in expenses or overhead chapter, you will find these three things being discussed in different sections of that chapter. So how is this cost accounted for in your cost accounting books? How do you do charging of this cost? That is how this cost would go to the cost sheet and it would be added or charged to your product, your service, etc. And most important, if you remember our last lecture, when we were discussing the objectives and purpose of this subject of costing and cost accounting, we discussed there are broadly 5 objectives. One, why do we do costing? To ascertain cost. Two, to fix our price. Then the third aspect was control and reduction. Now, if you observe students, in today's scenario, it is very difficult to compete in the market by fixing the price. If you recall your 12th standard and 11th standard economics topic, we had the concept of forms of market. You had the oligopoly form, you had the duopoly form, you had the pure competition form, etc. Now, it is very hard in today's market to find a perfect competition. Equally, it is hard to find monopoly. So majorly either it is pure competition or it is duopoly. Like today in case of telecom sector, it is duopoly, or majorly in many of the FMCG sectors, it is oligopoly. Now, what is the feature of all these forms of market is that it is difficult to decide your price because there are already many players who have fixed the price. So you have to keep your price around them. And this is where the control function gains importance. Because if you cannot increase your price beyond a particular limit, then how can you run a sustainable and a profitable business? That is by keeping a check and control on your costing. If you also remember in the last lecture, we discussed cost reduction may not be every time. It can happen one, either if in the original working format there were a lot of losses, so now you can reduce the losses, automatically the cost will come down. Or if there is any breakthrough, you have a new technology of production, you have a new technology in making, marketing, distributing the product, or there is a new raw material that has come to existence, a new labor that is coming to your business. Only in that case you can achieve reduction. But that will also be one time. But the regular and the day-to-day activities control. And that is why this gains an importance in all these three elements, because these are the three elements of cost: material, labor, and expense, and all have to be charged, all have to be controlled. Now, if I talk about this chapter in particular, from the exam perspective, you have questions on all three aspects, but the major part of your materials, exam paper, is having questions relating to the control aspect. And maybe then secondly, few would be relating to the charging aspect. We'll study each one in detail. Now, when we talk about material, there are three functions relating to material. And all this accounting, charging, controlling would be for all these three functions. What are these three? First is the procurement. In simple words, I will call it as purchasing. So the first function relating to material is the procurement. So you procure material, you purchase material. The second very important function is the storing. However, as we move ahead in costing, when you go to the CA final level and in your self-paced, the costing subject, when you study, you'll find that over a period, the new technologies that have been devised and the new concepts that have come into this subject of cost and management accounting, they say that storing has to be reduced. Storing function has to be eliminated. So you have different concepts like just in time, etc. See, maybe these words may not make much sense to you, but still I am using these words so that at least something is falling on your ears whenever you are reading any other subject or topic or something at a higher level, these words which have felt on your ears would definitely make some resemblance there. So there is a concept called as just in time. That is to eliminate the storage function. We'll study that. Now, what are the three functions relating to material? The procurement, that is purchasing, storage, and finally, the utilization of this material into your final product, into the production process, that is consumption. Now, why I am highlighting this? Because when we have to study accounting, we need to study accounting for all the three functions. When we see charging, we have to see charging, that is how material would be charged, keeping the three functions in mind. And again, when we have to control, we have to ensure that all three things are controlled. Fine. Now, I'll just pause for a minute. I'll open the discussion forum. Anybody has any questions up to this point? Any pointers you need to add before I will proceed with my deliberation? Yes, students. Technical team, I hope the students can unmute if anybody wants to. Sir, when will you upload this notes? Achha, you want these notes also? I'll do it today itself. I'll do these notes, upload these notes, plus I have made some summary of some questions. I'll do both. Yes, sir.
Sir, what you say by charging, I cannot understand.
Okay, good. I'll explain what I mean by charging. Good. Yes, please. Go ahead. Satish, ask your question. So now we have to study the costing component and also your voice. I have lost you,
Sir,
Satish.
hello, sir.
Hanji.
Sir, what is control?
Control, I'm explaining. See, we are going to study all this. So don't worry for that. This is what is our today's discussion.
Okay, sir.
Satish, I have lost your voice, so I could not understand your question. Adishri, please go ahead.
Sir, I couldn't get about the control.
What did you did not get, beta?
Sir, what is the meaning of control?
You are not present last lecture, beta. Control means to ensure that the cost does not go beyond the present level wherever you are. So if you are able to produce it in 20 rupees today, so ensuring that the cost remains within 20.
Okay, sir. Thank you, sir.
Right? Now, I'll answer this important question, ki what is the meaning of charging? See, charging is the concept which is, or the terminology which is used in costing. Now, what do I mean by charging? Let me give you an example. Let us take a very simple example. I again take the same example of dinner, because see, if you want to understand a concept, you should be able to yourself see, feel, and also analyze it. If I take some industry example, it may not connect with yourself. So I'm taking an example which you can yourself see and analyze around you. So again, whatever dinner you had last. Now, last time when I had said yesterday night's dinner, so somebody commented, sir, I did not have dinner yesterday night. So that is why I've changed my stand. Now I'm saying whatever dinner you had last, whenever you had it last, let me take you to the costing of that. Now just understand this. I'm just taking example of material to explain you what is charging. So I have rice, I have dal, I have the wheat flour. Just taking these three examples, there could be a list of materials that we are using. Now, just pay attention. When I purchase the material, I purchase this in the quantity of 50 kgs, this in the quantity of 10 kgs, and this again in the quantity of 25 kgs at some price. Now, this is what I have purchased, and I have incurred some expense on that while purchasing. So that is my cost of rice, that is my cost of dal, that is my cost of the wheat flour. Simple. Now, out of this total cost, let us say this is into 20. So the cost of wheat flour is 500. Let us say this is into 15. So the cost is 750. Right? Let us say dal, it is of rupees 200. So cost is rupees 2000. Now this cost I've already incurred. Now I would be doing costing of every day's meals I have taken my yesterday night's meal, that is a dinner, which is my cost object. I want to find out what was the cost of dinner of myself, that is one person, which is my cost unit. Now, how will I do it? I will have to find out of the rice, how much rice I consumed yesterday. Out of dal, how much was consumed yesterday? Out of the wheat flour, how much was consumed yesterday? This I will identify. Just try to recall my first lecture. And please be regular to all lectures because we are studying costing subject for the first time. We already discussed, even Sen Gupta sir had informed me that this is a very important subject in your career also, for job purposes, for consultancy purposes. So you have a very big career option in costing. Try to pay attention and be present to all lectures because the concepts are connected concepts. So if you remember last time when I was explaining you how do you do costing, I said the first step is identifying. So what is now identifying? We'll understand it practically. I have to identify that yesterday in my dinner, or chalo, I'll make it more easier that individual dinner may be a bit difficult to understand to do costing. Let us say family's dinner. How much was each material consumed? Focus on each of the word which I'm using. Now, you will say, sir, yes, rice, let us say half a kg. Dal, let us say some 100 grams. And flour, let us say some 1/4 of kg. And I'm sure you will understand and appreciate this. It is easy to find out this. And because it is easy to find out this, that is why these costs are my direct cost. So these are my direct material cost. Why? Because what is a direct cost? The cost which is easy to identify. Now, this is what I mean by easy to identify. You can very well find out how much. So once you have identified this, the next step is simply to multiply it by the price. But this may not be this price because this price is the purchase price, the price at which you purchase it. However, in costing, we have to find out something called as the charging price. What is this charging price? Either by the end of today's session or in the next session, we'll understand this. Now, when I identify how much I will be consuming that material, and when I compute the price at which I should charge it means I should value it in simple words. Let us say this price for rice comes to 20 rupees. So I will find out how much cost. Now mark the words, how much cost was in that particular product, how much cost I can add to that product, how much cost I can charge to that product. So half a kg consumed into the charging price of this is 20. So I will say in yesterday's dinner, the rice which I consumed, the value of that which will be charged to my dinner, which will be added to the cost of my dinner is rupees 10. Similarly, for dal, let us say the charging price comes to rupees 300 into 100 grams. So it will be 3. Half a kg, 1/4 kg of flour which is consumed. Let us say it is coming as 30, the charging price. So this is what is charging. Charging means identifying two things. One, the quantity that is going into that particular production, into that particular product. Identify that, compute that. And most important, as a cost accountant, your role is this. Because this you will get from your records maintained by the company. Even your engineers who are deputed on that particular product will tell you this. But this part is only what you can do as a commerce person. Nobody else can do. And how to do it, that is what we are going to study in this particular aspect of charging. In charging, we are going to find out the price. Now, when you do this, this is what is called as charging the cost to your product. So I have charged my material cost. Now, let me take you ahead. If later on when we'll study the labor or the employee component, the same thing will happen. Let us say, again, I'm talking about the direct labor because direct is only what you can identify. Then the challenge will come, then how you will charge indirect, that is overheads. That is another interesting point that we'll discuss later when the chapter comes. So in labor, how do I charge labor? Same. I'll have to first see what are the different type of labor. So one is, if you remember, we said cooking was the labor. The another was serving. and the other was cleaning. Now, cleaning will be indirect because it is hard to identify how much cleaning labor went into this. Maybe you can identify this. So let us say cooking, 2 hours, I can identify 2 hours, right? So 2 hours is the cooking labor, cooking efforts, cooking time which went into yesterday's dinner. So I have identified this. Now I have to find out the charging price. And if you remember last time's discussion, since mother itself is cooking, or somebody from your family, dad or somebody else from the family itself is cooking, how do you find out the price? We discuss the concept of opportunity cost. So we'll identify the price per hour. Let us say it comes to rupees 1,000. So the labor cost for cooking, which is charged to yesterday's dinner, is rupees 2,000. And this is how once you start charging all types of expense and you add, you get the total cost of your product. I hope I could explain this very important, the most crucial concept of costing, that is charging. Now, in charging, understand only two things have to be computed or identified. One is the quantity part. So in case of material, it would be the physical quantity, that is kgs, liter. In case of labor, it would be the time quantity, that is hours or minutes, right? And the second part is the charging price. How to find out this charging price? This is what you study in this part, what I have marked here, that is charging. What we are going to study in charging of material, finding out this charging price. Charging of labor, finding out the charging price. Overheads, finding out the charging price. Accounting, we all know it is debit, credit, maintaining books, maintaining different types of workings and statements. And controlling, what we are going to study. Control means maintaining your cost at the present level. How to control, we are going to study. Fine. I hope I have made all the points clear and I hope question is understood. Any doubts further before I proceed with the control aspect? Somebody has put in the chat, sir, costing is done differently. Yes, yes, costing is done differently. Acha, my request, whoever is putting something in chat, please put it to everyone. Because now here somebody has put a chat which I am trying to answer, but others will not be able to connect because they cannot see this. So whatever you are putting in the chat, please ensure you put it to everyone. So I'll just read out something which is written over here, which is very important. So not able to see the name who has put it. It is from S someone. So I think Srini. So, sir, costing is done differently in different industries. Is it necessary to understand the industry and company before you do costing? Srini, you are very perfect. With this example, I'm sure everybody would have understand that the costing is different for everyone. And that is why costing has a special charm. Only the concepts remain same, but the formats, what are the components of cost? Like in case of this, you'll have more of material. When we go to service sector, you'll have more of employee and the other cost. So Srini, you are right. Now Srini further asks how we will do it practically. But practically what we are going to do is, what is the starting point of this subject? What we are studying now is how it culminates into the practical. And as we have this articleship concept, maybe in your present articleship, or maybe after getting qualified, you can take up articleship in such a firm which is specialized in costing, and then you'll get the practical exposure. But what you are going to do, the concepts are going to be the same, what we are going to understand here. Acha, everyone is not allowed. Acha, I was not knowing this. Sir, we are not able to put message to everyone. Okay, no problem. You put it here. I'll read out wherever necessary. Okay. Okay. Understood. Okay. Okay. That is fine. Can costing practical sum in study material will be taught today? Yeah, I'll be covering the practical sum because without that you'll not understand. But it is not possible to cover each and every sum here, but I will cover majority of them. May not be from the module itself because module you all also have. I'll be sharing my own sums that would be also shared with you. You can download it from the portal, right? And that is where do we find the, what is this? The notes of these, but the notes will be uploaded. How to calculate charging. I'll teach you now how to calculate charging price. That is what I'm going to teach in the charging part. Okay. So let me take you ahead with the topic and our point of discussion. So now what we are going to discuss. Yes, Aniruddha, make it fast. Put your question fast. Ask fast. Actually, you're not unmuted.
Morning, sir.
Yeah. Good morning, beta. Please.
Sir, in this study material, it is written that cost accounting is concerned with accumulation and allocation of cost to different cost objects.
Okay.
Sir, my question is, what is meaning of accumulation of costs?
See, let us not get into those jargons. Focus on what I have been teaching you. That is what those words mean in simple. So accumulation means, see, to do this in this example, I need to find out costing of yesterday's dinner. How will I find out? By this process of identifying how much and at what price. This process is called as charging. We understood this. But for doing this charging, my first step is first noting. I'm using the word noting. First noting what are the different costs and how much of these total cost I have incurred. So how much of total cost of material of different items I have incurred, how much total cost of labor of different items I have incurred. This step is the accumulation. To accumulate means to bring together. So what I'm doing is simple. I'll put it in different words. I'll open an account in my books called as rice in the material heading. Then again dal in the material heading. Heading means material is a main group. Rice, dal are the sub items in that. Now I'll start debiting all the expense which I'm incurring on rice so that I get to know how much total cost I've incurred on rice, which is this total cost. Only when I get to know the total, then only out of this, how much is consumed yesterday, I can identify and charge. So this step is the accumulation step, which will be debited to rice account. And the credit would be how much I am charging every day to every product. So whatever I am doing costing every time, whatever I am charging, that will be credited from the material account to the respective product account. So accumulation is the first part, that is this debit. Whatever I'm incurring, I'll put it at one place so that I accumulate and make the total of that cost. I hope Aniruddha have made it clear, right? Students, start reading the module so that you can also raise questions. And when these questions would be answered, not only the concepts, but your real life costing will be understood by you. And also that will be a plus when you are answering questions, especially the technical ones in the question in the paper, which many times students find it difficult. Why they find it difficult? Because they have not understood these concepts. They only just learn how to solve. But if you understand it with the concept, I'm sure it will make a very big difference. So read the module, start practicing alongside our lectures, and start raising questions in the live batch. Sure. So now everybody has got a fair idea as to what is charging. Now, controlling we discuss, it means maintaining your cost at a particular level, how we are going to study. Now, in materials chapter, controlling, now I'm only on the control aspect, is explained in two parts. The first part says or is named as material control, which is more of the theory part. So this will be mainly important for your theory type of questions. And the second part is named as inventory control. This is for practical plus theory. And mind you, students, I mentioned at the start of this session that in material chapter, the control aspect has the highest number of questions, and the question is mainly from inventory control. So the inventory control part of the material chapter is the favorite of examiners, and everything that you are going to study over here is the practical part that you get in the exams, and also some important theory concepts that you are going to get. Now, in this material chapter, the control function has having two aspects. One is material control, one is inventory control. Now, somebody will ask me, sir, what is the difference? The difference simply is material control means controlling each of these functions: purchasing function, storing function, consumption function. Now you'll say, sir, what is the meaning of controlling the purchasing function? It means ensuring that you are making right quantity of purchase, right quality of purchase, purchase at the right time, at the right price. See, when you do all these things right, automatically the cost will remain in control. If you are not purchasing with a proper plan, you will miss out on taking the price advantage in the market. If you are not purchasing with a proper plan, with proper schedule, it may happen that when actually material is required, it is missing. See, the simplest way of understanding material chapter, I always say, is go to your kitchen, speak to your mom. Mom is the best finance manager. Mom is the best cost manager. How? You'll get to know. So go to your kitchen. Now, just ask your mom how she decides the purchasing part. She will decide the purchasing part by making out a plan as to how much of each quantity would be required. Then besides that, what she will be doing is she will also now has some past experience of when you have sale, when you have different types of this discount melas. Then she also keeps on searching. Now, what are the new shops opened? What are the new portals that have come through which if I place order, I will get the best price. So this all things she does, that is what is the material control relating to the purchasing function. Right time, right quantity, right price. What is the storage function? The storage function is simply ensuring that whatever materials you have purchased are stored till the time they are required for consumption. And this storage should be in such a manner that there should be minimum wastage or losses during storage. There should be no deterioration in quality. There should be no reduction in quantity by way of theft, etc. So ensuring that your storage is in the most efficient manner is the storage part of the material control function. And then coming consumption, it is ensuring that you have the proper quantity whenever it is required. So let us say in the morning now, when your mama is making the breakfast, it should not happen that when she goes to the kitchen, she suddenly finds that, okay, this dal is consumed and I have no quantity, or there is no milk to prepare tea and coffee for everyone. So that should not happen. So ensuring that you have the right quantity available whenever it is needed for consumption is the material control over the consumption function. So this is the theory part. Maybe if I get time, I'll go through the theory from the module. I request that today you study this material control part from the module so that we can take your questions in the next lecture. Now I can come to the most important part in material chapter relating to control, which is named as inventory control. Now somebody will say, sir, inventory and storing is one and the same. Yes, you can say theoretically or by way of definition, inventory relates to storage. Then you will say, sir, then what is difference between the material control relating to storage and inventory control? So I'll say this material control relating to storage was only talking about the theory. Now, how to achieve that is what is the practical part given in the inventory control. Plus, we start with the concept or the definition or meaning of inventory control. I'm using simplified words. Obviously, technical words you'll get in the module. So what is inventory control? In very simple words, it means with minimum inventory, you should be able to achieve maximum sales. Simple. Now, minimum is actually not the right word, but I use minimum because it sounds or it relates well. I will replace this word by the most correct word, that is optimum. So having optimum stock or inventory, and with this optimum stock, achieving maximum production or sales. So with optimum or minimum investment in your stock, you achieve the maximum output or sales. This is inventory control. So inventory control simply means, now keeping all this aside, in very simple words, is ensuring that you have optimum stock always. Again, go to your kitchen. Optimum stock means what? Optimum means neither too high, neither low. If you carry anything which is unnecessarily excess in stock, what will happen? There is a possibility it may be wasted either because of deterioration in quality because it would be stored for a longer period of time, or there may be theft. Similarly, the more you keep in stock, the more is your money blocked, which affects your working capital. So let us say your budget of the family per month is 50,000, out of which 30,000 is kept in stock only because we have filled in a lot of material in kitchen. You will have only 20,000 left for meeting your other expenses, which may fall short. So we do not want to keep our funds blocked too much in any one thing. So keeping too high an inventory has these risks. So the second option is let us keep the minimum possible of everything. But then there is again a risk that if you are keeping something minimum, like yesterday, milk in the night, generally only one person consumed, but somehow yesterday everybody in the family was sitting for having some chit chat and discussion, and somebody suddenly said, I need a cup of coffee. Everybody joined. So suddenly we ran out of milk. And early morning, when somebody has to go to their work or college or studies, the milk which is required to make early morning tea, coffee, etc. is not there. Why? Because you had kept very limited quantity. So even this can be risky because it may stop your production. And stoppage of production means no production, no sales, loss of profit, loss of goodwill, everything. So optimum stock means ensuring that neither you carry too high, neither you have too low. And doing this, achieving this is inventory control. Now, how to do this is our today's discussion. I already explained there are three functions: purchasing, storing, and consumption. Now, I agree that inventory control is relating to the storage part. But let me tell you, for inventory control, you don't have to look at storage. Then what? You have to look at these two. You'll say, sir, why or how? Simple. See, storage or what is there in the stock is the net result of this. Simply, how much you purchase, how much you consume, the balance is stock. Simple. So if you purchase 100, you consume today 60, the stock is 40. This becomes opening stock tomorrow. Again, you purchase 100. The next day you consume, let us say 90. So 40 was in stock, 100 you purchased, it became 140. You consume 90. Now the stock left is 50. So what is stock? Stock is always the balance. Balance of what? Purchasing and consumption. Now, if you want to ensure that this quantity is optimum, that every time, whenever you go to your kitchen, simple, understand this practically, visualize it. Whenever you go to kitchen, you check the rice, you check the dal, you check some masala, you check some vegetable. You should find it in optimum quantity that whenever it is required, the quantity should be available. But how is this determined? It is determined basis these two. Now, if I want to achieve this, achieve means I want to ensure that I have the optimum, that is the most perfect quantity in stock. What should I do? Because we are going to study the practical techniques here. So I have to now focus on two functions, that is purchasing and consumption. Now, please understand, consumption many times is not within your control. Like I gave you example. Yesterday, suddenly, many people asked for coffee in the evening, which is not there in my schedule. Then suddenly, I am now in a big fix because I have not kept sufficient quantity, and maybe at that 11th hour, I may not be able to get down and get that particular product from the market. So consumption at times may not be fully within your control, or I'll put it differently. I would love to do maximum of this because the more I make consumption of material, where I'm making consumption in production, it means I have more of production. So I will never want to restrict my production if I have that much demand. So I don't want to control this. So even this is out of control. Out of control means I would not like to control. Then your entire burden is on purchasing to maintain optimum stock. Please understand this. So this either may be out of my control because I may not have the choice to decide how much would be consumed. Second, I would also not like to control because the more consumption I'm doing, it means there is more production. It means there is more demand, because of which I'm doing that. So I would like to do more and more production so that I can make more and more sales. So I would definitely not like to control or restrict it. Then how to achieve maximum or optimum stock? Not maximum, optimum stock. Simply, I will find out two things about consumption: how much I consume and when this is consumed. How much and when. And then simply I'll try to ensure that my purchase matches this. So whenever I need a particular quantity for consumption, I have to design or plan my purchases in such a manner that that quantity should be available. So now I name it as right quantity of purchase. Similarly, this quantity should be available at the time when I need it. So I will say the purchase had to be at the right time ensuring that whenever I need a particular quantity for consumption, it should present in my stock. Now, what is inventory control? Inventory control is maintaining optimum stock. Stock is a function of purchasing and consumption. Consumption, I would like to do maximum. I would not like to restrict. Consumption, two things: how much I need and when I need. I have to plan my purchases accordingly. That whatever I need for consumption, that much should be purchased. And whenever I need it for consumption, it should be available at that time. It means in purchasing, I need to do two things: right quantity, right time. And this becomes my two most important techniques of inventory control. Right quantity of purchase is what we are going to study, named as EOQ. Right time of purchase is what we are going to study in the technique called as stock levels. So in EOQ concept, we are going to study the right quantity of purchase. In stock level technique, we are going to study right time to take different actions so that you have always have optimum stock, right? So again, I open this for discussion. If anybody has any questions, I'll take your questions, because now I'm going to start with the concept of EOQ. Yes, please. Somebody asked, I'm running a hotel on rent and I'm paying rent. So will the rent be adjusted in dinner cost or cost sheet? Yes, every cost will be added to your products cost. Then only you'll be able to find out the complete price of your products. So even if you're paying rent, that will be added. Let us say whatever assets you are using in your restaurant or in your kitchen in the form of different utensils, in the form of different gadgets like your microwave oven, etc., chimney, etc., depreciation of that will be added. Then tomorrow, if you have incur some repair, maintenance cost, anything that will be added. Another question is, sir, if a person is running a restaurant, hotel on rent and it prepares dinner, is paying rent indirectly, so will rent be adjusted? Yes, I answered that now. So rent will be at every cost which is related. This is what we discussed in the last lecture, which is related to your product, your service, that will be part of cost. Company following their own costing standards should be followed ethical price concept basis quality price per product. I did not get your question. So company is following costing. There has to be ethical something. I did not get the question. Sir, if a person is running a restaurant, how many times you're asking the same question, beta? Sir, why there is a trade-off between purchasing, storing, consumption in material costing? Trade-off. It is not trade-off. It is matching. So I'm matching my consumption time and quantity with my purchasing time and quantity, so that whenever I need for consumption and whatever quantity I need, that should be purchased or linked accordingly, so that I always maintain optimum stock. I'm neither carrying too high or too low stock. Sir, material and inventory is different words. Yes, but many times they are used interchangeably. See, in every language, there are certain words which may have multiple meanings and they may be used interchangeably. So generally, material and inventory are generally different. Inventory always means the stock. But many times in general usage, for referring to material also, we say inventory. Sir, but this consumption quantity has its own drawbacks. How would we get an exact assumption on regarding consumption? See, but that is the costing. We discussed in the last lecture that costing is a estimated concept. It is not like your accounts that after everything has happened, now you are only passing the journal entry of purchase or of sale. Costing is always based on estimate. And let me tell you, every business, our country, everything is run on the basis of estimate. Right now, from November, December, we will be starting preparing the budget for our country. But the budget will be for the next financial year, which will start in April 25. So still we are preparing the budgets. We have estimate. The budgets may go wrong. That is a process. Okay, I think I've answered every question in the chat. Anybody has any questions you want to ask live, please? Is it possible to have optimum stock in? But it is possible, nahi. It is a target to have optimum, because until unless you have optimum stock, or see, understand one thing, whether it is possible or not is never thought by any business leader. Because if you start thinking whether it is possible or not, whether I can pass both groups in first attempt, then you'll never pass. Now I'm just linking your question on whether optimum stock is possible with this. You have to believe and you have to find out techniques, you have to find out methods, processes, how you'll achieve that. So you cannot say, sir, optimum to hota hi nahi, ye sab theory hai. Let me tell you, see, you all have not seen industry. That is why you're saying this. You go to industry, whenever you will take up job, you'll find that every industry runs on budgets and estimates, and every industry achieves the optimum. The one which achieves, they survive and they grow. Yes, Satish.
Sir, how you know how much you purchase?
That is what we are going to find out. Satish, that is
Okay.
a technique. That technique is called as EOQ. That is now what we are going to find out, how much to purchase, right? So let me take you to this first technique. See, there are two major techniques only in inventory control. There are multiple, but these are the two most important ones in inventory control. And in your entire material chapter, 90% of the paper is only on these two. One is EOQ, the other is stock levels. Practical entirely on this. Theory also many times revolve on this, or remaining theories on the chapter, the 10% part which I have left out is the remaining theory, right? So pay attention. We are going to start with something very interesting, mind-blowing concept and a thought-provoking concept. Please pay attention to this. Practicals will become easy once you understand these theoretical concepts. Now, the technique is named as EOQ. Full form is economic. Someone says economical. All these are variations. Fine. Economic order quantity. You can also say economic ordering quantity. These are variations. Now, question is, what is economic order quantity? I've already mentioned, right quantity of every order. So it is right quantity of purchase. I'm just expanding it. It is the right quantity of every order. Now you'll say, sir, what it is? Just be patient for next 10-15 minutes. You'll understand everything. Let me give you some examples. Let us say, now I'm continuing the example of dinner and kitchen to make it very simple. We are talking about this raw material rice. My annual requirement of rice in my house is 100 kgs. So in the whole year, in my house, in my family, we consume 100 kgs of rice. Let us say the price at which we get it is rupees 25 per kg. This is the purchase price. Now, understand one thing, this 100 kgs is my annual requirement. So I'm going to require this throughout the year. Now the decision which I have to take is, I want to ensure that my storage, my inventory should be optimum. Optimum means it cannot be too high or it cannot be too low. If I have to have simple answer, how much I should purchase every time? The answer is purchase 100 once, keep it in your stock and use for the whole year. Matter is solved. Many people do that. In fact, if you see, earlier our elderly people had this knack of buying this wheat, rice, etc. for the whole year and stock it for the whole year. Fine, that may be okay from their perspective. But if I'm now looking at from the cost perspective, at reducing my cost, controlling my cost, ensuring there is no wastage, then I will not go by that option. So I need to decide what is the perfect quantity which I should place order every time so that my annual requirement of 100 is satisfied. Now, what is this concept that we are discussing is right quantity which should be ordered every time. In other words, every time how much I should get from the market so that throughout the year, I complete the 100 kg quota. This is your answer to the first part, right quantity of purchase. And I am trying to match it with my consumption. Keep this in mind. Now, I want to ensure that this quantity of 100 kg is required in the whole year is purchased in some small lots, and I want to find out the quantity of each lot. Now, there are certain assumptions in every law, in every technique, there are assumptions like law of demand, law of supply, law of marginal utility, whatever you studied, it comes with some riders and assumptions. So I'll first add one assumption. So first assumption is that whatever I'm going to order, this quantity will be fixed. Fixed means what? Let us say out of 100, if I decide 5 kg to order, it means every time when I'll purchase from the market, I'll buy 5 kg of rice every time. So first assumption is there's this order size is fixed. Now somebody says, sir, whether it is realistic, answer is yes. Please understand one thing. All this planning is done at the start of the year by everyone. Like our country will be preparing budget. Similarly, every company, every corporate who is working at a very big level has to plan, has to schedule. Same thing. Now you're in this particular syllabus, in this particular course, you have to plan, you have to schedule your daily studies, your practice, your paper solving, etc., your revisions. If you plan and schedule it today and work accordingly, 100% success is guaranteed. Now, pay attention. So the point is, they plan this at the start. Now, when they are planning at the start, they keep the quantity fixed so that every time, see, the planning department or the budgeting department cannot say कि अच्छा इस बार कितना खरीदना है, how much and I should go and purchase this time. They will say we'll fix one quantity, that quantity will be repeated every time, and that is why the quantity that you purchase every time is also called as reorder quantity. So now we are slightly going to the technical words. So the quantity which I'll purchase every time from the market, the quantity for which I'll place order every time in the market will be fixed. And that quantity is hence called as reorder every time you place order of that quantity. So in my example, it is not 5 kgs, but just I took an example. Now, this reorder quantity, when it is the best quantity ensuring the minimum cost, will be called as economic order quantity. So what is economic order quantity? It is the order quantity, that is a quantity for which you will place order again and again every time. And this quantity is the most economical quantity. Now here, I make the first column with the heading of order quantity. Now if I have to purchase 100 kgs, then how much I can order every time? I have multiple choices. My first option is I'll purchase 1 kg at a time. It may be too low. So my another option is I'll purchase 5 kgs at a time. Another is 10 kgs. Maybe another is 20, 25, 40, 50, 60, 90, 100. See, I'm just taking random figures to give you an example how this quantity, like somebody asked us, or how will you find out the right quantity of purchase? So this is what I'm trying to give you example. Now, I have so many options, choices to decide from. So I need to ensure that in the whole year, I'm able to achieve this 100 kgs requirement should be satisfied. And for ensuring that this 100 kgs is purchased or satisfied, I have these multiple options. Now, how many options I have? I have minimum 100 options. 1 kg, 2 kg, 3 kg. I have minimum 100 options. I've just listed a few for understanding what I have to explain. Now, I have to decide out of all these purchase options, which quantity I should place order or which quantity I should select for placing order every time. Now, all these quantities that we have selected is your reorder quantity. Every quantity is your reorder quantity because whatever you select out of this, that you will be placing every time. But out of all this, only one quantity is the one which will be the best or which will be your answer because it will ensure the most minimum cost on that. And anyways, we are doing all this for cost control. So out of all these quantities, the quantity which will ensure that I have the minimum possible cost will be the most economical quantity to place order. And that is why that quantity will be called as EOQ. So all these quantities are ROQ. ROQ is what? It is the reorder quantity because you will be placing order of one of these quantities every time. So all these quantities are ROQ options. Out of these, one which you will select because it will be the minimum cost option, that will be then called as, that quantity will be called as EOQ. I'm just saying example, let us say this is your answer because for this quantity, your total cost is minimum. So this will be then called as EOQ. But how to find out of this, which is the most minimum, that is what is the technique. So what are the figures? You have your annual requirement, which is 100 kgs. You have the purchase price. Now, there is a concept called as ordering cost. And this will be referred by O. This is not zero, this is O. The short form for this is O. What is ordering cost? See, every time you have to place an order, you have to go to the market, you spend some on traveling. Also, your that much time is invested in going to the market. Similarly, in a factory or in a corporate scenario, every time you place an order, there is some process. You generate a purchase order, the purchase order will be sent. All this process incurs some cost. That cost that you incur every time you place an order, like in my example, you go to the market to get the quantity. That cost of going to the market, the travel costs involved, your time involved, that is called as ordering cost. Let us say it comes to rupees 50 per order. Per order means every time you go to the market, you spend rupees 50. Now, interesting to notice, this is per order. Now, whether you place order of 1 kg at a time or 20 kgs or 40 kgs or 90 kgs or 100 kgs, 50 will be incurred per order. So it will be not per kg of material, it will be per order. In one order, you may purchase 100 kgs at once. So you'll incur only one time traveling. If you decide to go twice because you are purchasing 50 kgs only in one time, so you'll have to go to market twice. So 2 times you will be incurring this cost. Now I find out something called as my annual ordering cost. How much I'll be spending on ordering for the whole year, in the whole year. How much I'll be spending? Simply try to understand this simple mathematics. I'll find out number of orders, or in other words, number of times I'll go to the market into O. So now you can understand, if you are going to place order of 1 kg at a time, so how many times you'll have to go to market? 100 times. Every time you'll incur how much? 50. Another example of, let us say 10. If you're planning to purchase 10 kgs at a time, how many times you'll have to go to the market? 10 times. How much will be the cost? 50 every time. Let us say you decide to purchase 40 kgs. So roughly 2.5 times. If you decide to purchase 50 kgs, 2 times. And if you decide to purchase entire 100 kg, 1 time. This is how you'll get your annual ordering cost. Now then, there is something called as annual carrying cost. Carrying cost for the time being, in short, is your storage. How much you'll be incurring on storing something. How much you'll be incurring, again, that is dependent on 2 things. One, how much is the stock, because your storage cost is directly linked with stock, and how much you spend on carrying that cost, let me call it as C. Now, what is this carrying cost, which I'm going to refer as C? The carrying cost is made up of 3 components. One is the warehousing, that is the storage cost, what we call as. 2 is your interest on capital, which is blocked or which is invested in your stock. So the more the time you are carrying something, you are keeping something in stock, till that much time, that much money is blocked. So there is some interest cost on that. And then you have whatever there is loss or wastage while it is in stock. So these 3 together, that is the storage component, the interest component, the loss component, makes up the carrying cost. This cost many times is given as a percentage, 10% per annum. If it is given as a percentage, we have to convert it into per unit. How do we convert it? We are given the purchase price in the sum. You multiply the purchase price by the percentage. So 25 into 10%, I will get my carrying cost as 2.5 per kg per annum. What it means? To store 1 kg of rice for the whole year, you incur carrying cost of 2.5. That is per kg of rice for the whole year. Now, I want to find out how much carrying cost I will incur in the whole year. For this, my carrying cost per kg of rice is this. Now, I have to find out how much stock I will be carrying, I will be storing for the whole year. That stock quantity multiplied by this will give me my annual storage cost or annual carrying cost. Now, please understand one thing. If I am buying as low as 1, my stock would be very low, because if I'm buying 1 kg, I buy, maybe it will be get consumed in 2-3 days. Again, I'll go to the market, I'll again buy 1 kg, 2-3 days consumed. Again, I go to the market, buy 1 kg, 2-3 days consumed. So it means I will always carry a very minimum stock. Let us say against this, I decide to buy 10 kgs. Again, there would be some stock, because now I'm buying 10 kgs, which may last for a month, around a month. It will get consumed. Again, I'll go to the market, I'll buy 10 kgs. Again, it will last for a month. Again, I'll go to the market. So there is some stock that would be stored if I'm buying 10 kgs at a time. But against this, if I buy 50 kgs at a time, then I have bought 50 kgs. It may run for 6 to 7 months. Now here I will be having a decent quantity in stock. But if I buy 100 kgs at one time, I will have 100 kgs in my godown, in my storage, which I will be carrying, and it will be consumed throughout the year. Now you'll observe my stock would be least here and would be highest here. That is why I've just made arrows. And interesting to notice, by multiplying the stock quantity by this, that is 2.5, which is my per kg per annum carrying cost, I get my total annual carrying cost. Now, when I get my total annual carrying cost, you can understand it would be lowest here and it would be highest here, because here my stock would be lowest, here my stock would be highest. I compare this with the ordering cost. If you see, interestingly, my ordering cost is highest here and lowest here. I hope you can understand this. So there is an interesting relationship between these two costs. What is this? As I go on increasing my order size, this is my order size, that is the quantity which I'll place order. As I go on increasing my order size, this cost, that is my ordering cost, is getting lower. I'm talking about the total annual ordering cost. Why? Because the more quantity I buy in one time, lesser number of times I have to go to the market. But at the same time, this cost, that is my carrying cost, is increasing, because the more I buy at one time, the more I need to keep in the stock. So both these costs have inverse relationship. Now, what I want to find out is my total material cost. Now, what is total material cost? Total material cost is three things combined. First is your annual purchase cost. That's the cost of purchasing the material. The second is this annual ordering cost. Third is this annual storage, that is carrying cost. Total of all these three costs is your total material cost. Now, in all these options which I have written, my annual purchase cost will remain same. Why? Because it is my annual requirement, which in my example is 100 kgs, multiplied by my purchase price, which in my example is rupees 25 per kg. So whatever is my order size, my annual purchase cost will be rupees 2500. Whether I buy 1 kg, 5 kg, 10 kg, 20 kg, because I will be buying it throughout the year 100 kgs. So in all these options, my annual purchase cost remains same. But what changes with these options is my ordering and carrying costs. And interestingly, they have inverse relation. Now, what I'm doing mathematically is I'm simply adding all these three costs. And out of all these, the one which is the lowest, I'll identify that. Now, this relates to 20 kgs order size. So 20 kgs, as I mentioned earlier also, is my most economical option of order. So it will be called as EOQ. And remaining options, which I can place order, but I will not, because they are not so much profitable, they will be called as ROQ. See, all these quantities are ROQ. ROQ is what? Reorder quantity. Out of this one quantity where my total purchase cost is lowest is my EOQ. All other quantities have some cost, but they are higher. So they are simply ROQ, that is reorder quantity. Right? Now I'll take few examples and we'll proceed. I'll take firstly your questions. I'm sure With this, many questions would have come up. Okay, I'll take questions. Okay, how you know how much purchase? That is what we are finding out better. So how much purchase I have to know, Satish, is now what we are going to calculate. See, I'm taking the questions from the feed. So the questions some questions may be the one which you had asked at the start. Okay. Purchasing mostly on bulk purchase. So consumption is like assumption on basis for any hotel. I didn't get the question. Due to high expense on service provided by five-star hotel, prices are higher than from local food vendor for the same. Yes, that is what is the overheads component. That is where the product will be costly in five-star hotels because they are spending more besides on material on the other facilities, and that is where the overheads cost will make it costly. Maybe the material may be more or less same in a street vendor and a five-star hotel, barring few difference. But what makes the hotel food costlier? Because of the overheads. That is the other cost other than material. Sir, I am from Punjab and electricity is free here. My question is that near my home here is a NPO and they produce products by using machinery and electricity. Sir, you said that NPO are also required for costing for minimizing and controlling the costs. I want to ask, sir, would they mention electricity charges? Very good question. But I see if something is free, at least as on date, that will not be added to your cost. But remember one thing, free means what? When you are yourself working in your organization, what you are doing is not free because there is opportunity cost. But here, what you are getting from outside, maybe because of some government policy or because you are some NGO, they are giving something free. So for the time being, that will not be your cost. And that is why NGOs are able to provide things at much cheaper rate. Like in a government school or a government hospital, why the prices are less? Because many of their costs are being funded by government or some other body in the form of grants and donations, and that is why they can charge less. So you are right. If in your area or because you are an NGO or because there is some special funding or scheme by the government or by any authority, if any of your expense are being reimbursed or met by them, and that is why it is free or discounted to you, obviously in your case the cost would be less. Sir, I am working and involved in day-to-day making of a company, and I know how difficult of achieving optimum stock where changes happen very quickly. Yes, you're right, Beda. See, all these things are not easy, and that is why I've been saying from day one that costing is a very highly paid job. And the more you are able to achieve this, see, nobody is able to achieve anything which is on estimated basis correctly because estimates are bound to go wrong. But the more nearer to you are to your estimates, and also important, see, estimates may go wrong, but at least estimates give you a direction so that whenever things are changing, like you mentioned, many times things change very fast and without much prior knowledge. So that is where your skill of managing comes. So once you have a plan in the form of the estimate, whatever you have made, you get a direction, and when you are working on the direction, whatever contingencies happen or whatever changes happen, you can immediately adapt to that. And that is where your skill as a cost accountant comes out. Multiple option, yes. Sir, didn't get the annual ordering cost concept. Okay. See, annual ordering is the total cost that you'll incur in the whole year when you are making the purchase. Now, the cost is fixed per order. Means every time you go to the market, you spend 50 rupees on your traveling and on the time. Now, if you go to the market once because you have bought entire 100 kgs once, you'll incur in the whole year only 50 rupees. But if you have to go twice because you are buying 50 kgs, you'll incur 50 rupees twice. If you are going 10 times because you are buying 10 kgs in one lot, then you have to go 10 times to complete your 100 kgs requirement. Then 10 times into 50 rupees 500. If you buy only 2 kgs one time, Then to complete your 100 kg requirement, you'll be going to the market 50 times, and every time you'll spend 50, so the cost will be very inverse proportional. Yes, inverse proportional, you're right. Conflicting, you're right. Indirect relationship, right. Carrying cost. Sir, how to find carrying cost? Please explain. I think I've explained. Carrying cost is made up of three components. You find out how much you spend on storing. You find out what is your interest on the amount which is invested. We know what is the rate of interest, and you have to estimate or expect the losses. Add up all these three. This makes the carrying cost. Now it is a very technical calculation. Normally in the sum also, you need not do the calculation. You are always given this carrying cost. So I'm not going to go into the detail of how to find out this carrying cost. It is given in percentage. Just remember, you have to multiply it by purchase price to find out per kg per annum. So it is a very interesting and technical process how to find out the carrying cost. But I'm not going to that because that is not required. Please explain carrying cost. I've explained. Sir, we have to assume that order cost every time would be same. Good question. See, we are assuming, as I said, every theory is based on certain assumptions. I've already made one assumption already that the order quantity is fixed. Now I'm giving you the second assumption. The second assumption is your purchase price is constant. Your cost per order is constant. Your carrying cost is constant. See, when you read the theory on EOQ, assumptions, you'll find this. First assumption is you can correctly estimate these figures. Second assumption is whatever estimates you have done will remain constant. So obviously, see, any planning requires these assumptions, not only EOQ. Any planning you do better, you require these assumptions that one, you can find out that estimate, and two, the estimate are going to remain correct. But both these estimates or both these assumptions will go wrong. And that is where the managing part comes. So you plan something and now you start working with the plan. Now, as things progress, you'll find that, okay, this estimate is going wrong. So revise this, change the estimate. Now, after 2 months, you find that, no, my annual requirement is going to be higher. Take that higher figure, find out new EOQ, place further orders as per new EOQ. That is what is the managing part. Suppose every time when we go purchasing a product, it doesn't have a similar price. So how we maintain ordering costs in this situation? Very good question. See, it may happen that every time your purchasing price is different. Now, please understand, what do these big corporates do? In order at least to ensure that their purchasing price remains same, they generally contract at the start of the year. You would have heard that there is some tender floated by some government or some big company. And when I apply for that tender as a seller, I am committing the price. So when I'm selling you that I have taken the contract of supplying this for the whole year, we fix up a price. There is also a possibility that if we fix up a price with some escalation clause. What is that escalation clause? That if slightly the price will increase beyond a particular limit, I'll slightly increase the price. So it is between you and me how we contract. So many times this price can be fixed. How it can be fixed? We both have contracted. You as the company have contracted with your sellers that, okay, we will be supplying you for the whole year at some X price, which will be fixed. So in that sense, you can ensure that your purchase price remains fixed. But again, practically, if that is not possible because I have not contracted in that fashion, then again, whenever the price changes, you will keep on revising the C or estimates when you prepare for a whole year. As the year progresses, you keep on revising. You keep on revising so that you are always in sync with what is happening next. Fine. Sir, what quantity of stock we have to take for annual carrying costs, reorder or total? What is the question? What quantity of stock? See, quantity of stock is this. This is the stock quantity, or not even stock quantity. This is the order quantity. Now, if I find out that 20 kgs is the most economical because the total cost is the lowest, every time I'll be placing order of 20. See, many people have asked, sir, please explain this again, please explain that again. I may not repeat everything again because we have limited time. You may again go back to the recording and see. But anyways, as I proceed further, these calculations will be repeated. Somebody has asked, sir, how carrying cost percentage? As I said, it is a very interesting and technical calculation, but since not required, you will be already given this percentage. I'm not spending time in that. Total market cost. This is not total market cost, but this is total material cost. It is simply total of your purchase cost, ordering cost, carrying cost. Total of these three is this. It is not market cost, it is material cost. How to calculate total material cost? See, it is this total of this plus this is your total material cost. something given for free should not be added in cost. Yeah, I think we already discussed. Whatever is free or subsidized, to that extent, your cost would be reduced. In the real scenario, the prices of rice changes. So when the price is less, if we buy more, the cost will reduce, right? See, that is a trade-off. So if you want to reduce your purchase price by buying more, because right now the prices have fallen, it will add to your carrying cost because you'll have to store it for a higher. So again, that's why I'm saying you keep on making these revised calculations again and again with different combinations. Like suddenly you find that because of some reason prices of a certain material has gone down sharply and you want to take advantage. You immediately ask your cost accountant to revise the calculations. See, that is what we will also have a calculation later on, that you have fixed this ordering quantity as 20, but your purchase manager comes and says, no, I want to buy 50. Why? Because there is some reduction in price. What you will do simply, see, I'm answering your question. What if there is a reduction in price? Will I buy more? Yes, you can buy. What I will do is I'll ask my cost accountant to make two calculations. One, give me total cost of this 20 kgs, which I have decided as my ordering economic order quantity because the total cost is least. But now since the scenario has changed, the purchase price has fallen in the market, and my purchase manager says, sir, I want to buy 50 kgs so that I get the benefit of lower price. What I will do is I'll ask my cost accountant to do this calculation again of 50 kgs, but now with a lower purchase price. So this purchase price has fallen. So with this lower purchase price, he will do this calculation again. I'll compare these two costs. Now, if I find that this buying 50 kgs at the reduced price is giving me a lower cost as compared to this, I'll change my answer. I will now order 50 kgs and I'll buy 50 kgs. So I keep this as my first plan, what we say normally as plan A. And if any of these scenarios change, I may switch to any of these if they are giving me better total cost, because my ultimate purpose is reducing the total cost. And that is how you also get in sums that, okay, this is the EOQ, but somebody comes and tell you that, okay, I'm giving you this much discount. What should be now done next? Then what you'll do, simply you calculate the total cost of both the options, the EOQ and the option which is given with some discount. Whichever is lower, your answer will be that. So good question, because that is how the questions are there. Somebody has asked, sir, economic order quantity means how much cost? No, it is not how much cost. Economic order quantity is how much quantity you will purchase every time so that your total cost, purchasing, ordering, carrying is the least. So it is a quantity that you place order every time. Sir, suppose that I am going to the market by using my motorcycle. So you find out the cost, na? How much petrol and everything will be consumed. Yes, that is indirect cost, correct. And that is your ordering cost. So what is the lead time? Okay, I'll tell you what is lag time. I'm yet to come on that concept. Lag time will be explained. So EOQ was not appropriate for industries having high price fluctuation. See, I will not say EOQ is not appropriate for industries having high price fluctuation, because anyways, all these plannings are required. Please understand and appreciate one thing. Until and unless I do any plan, I will not be able to proceed. How will I plan anything? How will I place the first order? I have to plan something. I have to estimate something. Maybe my estimates are wrong. I'll keep on revising. Na? So it does not mean that if there is a price fluctuation, let us say I'm into a business which requires steel where there is a regular price fluctuation, or let us say I'm a jeweler where gold prices fluctuate daily. Will I not plan something? I will plan, because otherwise I cannot run my business without planning, without estimating and placing order and doing everything on the basis of estimate. I cannot run my business. And it may happen that my estimate may go wrong. I may incur loss. But in some other scenario, when my estimates are right or there is some sudden fluctuation which is in my favor, so it is business. You cannot predict everything. Please now understand this. Till date, we have been trained, our minds have been trained to do what we already know. But a professional is one who is trained to analyze what can happen in future by predicting, and most important, as things change, not go by your plans, revise. That is what is a professional's role. That is what we are going to do for our clients in future. Sir, as you mentioned that we have to add warehousing cost in carrying cost before ordered, how can we add warehouse cost? But it is on estimate. Every cost is on estimate. Even your ordering cost is on estimate. Even your purchasing cost is on estimate. So that is same as warehousing. And it is so easy. You go to a warehouse keeper, ask him if I have to store so much of rice in your godown, how much will you charge? Simple. He will tell you, I will charge you per month or per day or per this much. You get your warehousing cost. It is so easy. Sir, when we fix price for the whole year at rupees 100, but the market price is going down 80, then can I already explained, but once the market price fluctuates, you revise your EOQ and all. And if you find the other option is better, you switch from EOQ to that option. See, now please don't repeat the example. If the electricity is free, I cannot take that questions again and again. Please. Preeti, maybe you can ask me other than class, because if I go on in one question again and again, it may not be good for everyone. Yes, Preeti, you have raised your hand, beta. Preeti, are you there? Okay, I'll proceed. Now, we have reached to that point where I have been able to explain you the concept of EOQ. Now, this is how EOQ would be computed. EOQ means you will find out that quantity which is the best, most optimal quantity, because it is going to give you the minimum cost, right? But in this process, Preeti, you're not able to unmute.
Sir, now
Preeti,
I'm
go ahead.
audible.
Yeah.
Yeah, good morning, sir. So I have
Good
a doubt, sir. Like we have a optimum stock annually, okay? And on the other day, there is a high demand of material, and we have reordering that material. So does it will affect optimum stock, or if yes, how?
Okay. See, understand one thing. Optimum concept is like the equilibrium concept in your economics that you have studied. I determined some optimal stock, like here in my example, I determined 20 kgs as my optimum order size. That is, this is according to me the best size. Optimum means the best one. But as you just said, there is some change in market scenario, prices fall or change in demand, something. So definitely this is not optimal. Agreed. Now your question is, so whether the optimal will be changed or this optimal will be wrong. Remember one thing, this quantity is my EOQ as per the estimates. If some scenario change, I may decide to purchase another quantity, like in my example, 50 kgs, because the prices have fallen and I'm getting better advantage by buying 50. I'll buy 50. But if this is a one-time change, then 50 is bought only one time. Henceforth, again, I'll switch back to my optimal, assuming other times the market conditions are same. Again, in future, if again there is some other change, I'll recompute. Maybe after this recomputation, I get this 10 kg option as a better option. So I keep this 20 kgs as a handy option, which is my first computation, but I switch to 10 kg till that new market scenario exists. The moment that market scenario changes and again we get back to normal, again I go to 20 kgs. So this is how better optimal figures are used. So optimal will change only if there is a permanent change in market conditions. In that case, my entire EOQ will change to some other level. 20 may become 40. But if that change is temporary, like somebody said, prices have fallen, so I buy 50 in that particular period. But again, I go back to 20 once the market normalizes. Again, there is some change. I recompute, I find 10 as a better option. I buy 10. I hope I've answered your question and everybody will have gained some understanding from this.
Got it, sir. Yeah.
Now, when we have to find out this EOQ practically in real life and also in your exams, this is the first way of finding the EOQ. What is this first way? I call it as trial and error. What is trial and error? Find out all the possible options. Here you have minimum 100 options from 1 to 100. You can buy any quantity. So you will first mark 1 to 100. You will find every cost for every quantity, that is ordering, carrying, and you will make a total. How many calculations you have to do? In this example, only minimum 100. If the quantity is 1000, minimum 1000 and so on, which is impractical because it is time consuming. So is there a shortcut? Yes. But this trial and error is very important because, as I said, in your exams, you will have these questions. What were your doubts now? Okay, what if price change? What if that change? For all those questions, your method would be same. One, you will find total cost of EOQ. Another, you will find total cost of all those other options which are given to you because of some change. And now find out what is the total cost at these options, the EOQ option and the other changed options. If the changed options are given lower cost, you will select that as the answer for that moment or that period. So this trial and error method will be useful for all those sums where you are asked to compare EOQ with other options. How? By finding out total cost. But when you have to find out EOQ first, this trial and error will not work because you'll have to make so many computations. Then is there a shortcut? Yes, there is a formula. But now I'll be explaining you something very important which will clear all remaining concepts which are there in your mind. And also this particular formula derivation will help you address the most difficult questions, because most difficult questions come from the basic concepts. Now to go to the formula, let me first explain you something from a diagram which we call as a graph. Now here on my x-axis, I'm showing the order size that is in my above table, the first column. So I start from 1 kg, I have 5 kgs, I have 10 kgs, I have 20 kgs, I have 40 kg, I have 50 kg, I have 100 kg. So these are my different order size options, which is my ROQ, that is reorder quantity. And on my y-axis, I'm showing the cost in rupees. Now I have two graphs, the upward going and the downward going. The upward one is which cost? Ordering cost or carrying costs? Answer. You can say O if you want to say ordering. If you can say C if you want to say carrying. I'm only asking of the upward. The graph which is going upward is ordering or carrying. Good. That's it. Stop. It is carrying. How? The more quantity I order at one time, the more I have to store, and the more will be the order carrying cost, that is the storage related cost. Conversely, the downward going graph is my ordering graph, ordering cost graph. Why? Because the lesser quantity I order in one order, the more number of times I have to go to the market to buy, and the highest is my ordering cost. But if I buy 100 itself in one go, then I have to go to the market only once. I have to spend the ordering cost only once, so it is the minimum. Now we all know from economics that when there are inversely related items, one is going upward, one is going downward, the most optimum is where the equilibrium happens, that is this. So how do I find out my EOQ? I find out my EOQ by equating these two graphs, and where the graph intersects, that is my EOQ, that is most optimum order quantity. Now this is what we have studied from graphs from in our school, also in economics also, but how do we apply it here? So for applying it here, see the graphs have intersected, both these costs have intersected. So mathematically what is happening, please pay attention to my words. At the EOQ level, that is at the EOQ quantity, what is happening mathematically? My annual ordering cost is equating with my annual carrying cost. So both the costs are equal. When you say intersection, intersection means the costs are equal. So at the EOQ level, so at this level, equilibrium is happening. So this is our most optimum level, which is over here called as EOQ. Whatever is this quantity, it is EOQ, right? At EOQ level, what has happened? Both these cost curves have intersected. It means mathematically both the costs are equal. So understand this. This is a very interesting and important insight about EOQ. At EOQ level, see, one we are saying my total material cost is the lowest. Correct. My total material cost is the lowest at EOQ level. Somewhere here was my EOQ, I suppose. So it is the lowest. Correct. But in other sense, if you see the graph, you'll also find out that at the EOQ level, these two costs, because these are the only two costs which are varying inversely, these two costs are equal. So can I say finding out EOQ is also possible by equating these two costs? Answer is yes. So if you equate these two costs, if you find these two costs, you can also find out EOQ. Now this is how I'll proceed to find out EOQ. How? First, I will try to find out my annual ordering cost. That is how much cost I will incur throughout the year for placing the orders. as we discussed already, I'll have to find out number of times I will go to the market for placing the order. So number of times I am placing order or I'm going to the market and multiplying it by my ordering cost, which is incurred per order, that is every time I go to the market. This I've already said is represented by O. Now, if you remember, when we were discussing this in the trial and error approach, how did I find out this number of times? How will I find out how many times I have to go to the market? We found out the number of times. Can anybody put some formula as to how I will get the number of times I'll go to the market to place the order? You can use short forms. EOQ is wrong. EOQ is what we have to still find out. Number of times I have to go to the market. How did I find out this? See, in my example here, we wrote, na, here I have to go 100 times, here I have to go 10 times, here I have to go 2 times, here I have to go 1 time. How did I find out this number of times I will be going to market? You can use short forms. Good. Others. Good. Impressed to know that you all have understood the concept. Super. Super. Wow. Okay, stop. So majority of you are right. I have one quantity which is my annual requirement, which is in my example 100 kgs, divided by whatever order size I fix. So if I fix 10 as my order size, 100 divided by 10, I'll get 10 times. If I fix 20 as my order size, then 100 divided by 20 is 5 times. So the number of times I go to the market is annual requirement upon the order size, order quantity which I fix. This is the formula for computing my annual ordering cost. Please remember this, because in the sums, you are also required to find out independent costs. That is, individually you have to find out annual ordering cost. Why? As I mentioned, the trial and error approach will be required when you are given 2-3 options that, okay, find out of this whether EOQ or any other option. How will you find out? For EOQ, you'll find out each cost: purchase cost, ordering cost, carrying cost, total. Similarly, for the other options given, purchase cost, ordering cost, carrying cost, total. This is how you'll be finding out the ordering cost. So this is the formula for ordering costs. Annual requirement quantity, order size, the quantity which you have fixed, and the cost per order given, the sum. Now I'll put it here in this equation. So it is AR, short form for annual requirement, upon order size. But here I'm already saying that this is happening at EOQ level. It means in this example or in this equation, my order size is the EOQ, because this at EOQ level only this is happening. Both these costs are equating, right? So when both these costs are equating at the EOQ level, it means the order size here is EOQ. So annual requirement upon order size, which is now EOQ, into O. This is my first part of this equation. Now I'll equate it with the other part, that is my annual carrying cost, right? So at EOQ level, both these costs are equated. Now this is going to be interesting. Somebody also asked me, rather 2-3 people asked me, sir, how to find out annual carrying cost? Now, please don't go to the spellings. I'm writing fast, so I'm not using the entire spelling. Fine. Annual carrying cost. Now, annual carrying costs, I already explained here. You require 2 things. One is your stock and the carrying cost per unit per annum. How do you find out your carrying cost per unit per annum? The percentage will be given. So I'm not going into how to find out percentage. Multiplied by purchase price, you get this. This is your carrying cost per unit per annum. We will represent it by short form C. Now, to find out annual carrying cost, I need my carrying cost per unit per annum. Now, please pay attention, students. Here, per unit means per unit of raw material. So my raw material is rice in kgs. So it will be per kg of rice and per annum. Now, when you are solving the sums, please pay attention. Whatever carrying cost is given, is it given per annum? Many times they give per day. So multiplied by 365. Or if the sum says, then 360. If it is given per month, multiplied by 12 months. Because in the formula, I need this carrying cost per kg per annum. Now I represent it by C. Now pay attention. I need to multiply it by stock to find out the total annual carrying cost. In simple words, storage cost. I need to multiply this cost, which is for carrying my 1 kg for the whole year. I need to multiply it by the stock which I will be carrying the whole year. And we all know the stock fluctuates. Whenever anything fluctuates, you take average. Now the interesting part is, how do I find out this average stock? This is going to be very interesting, because unfortunately all the books, all the coaching classes, they will only give you the formula, but nobody explains why that formula is average stock. Let me try to explain that, because this concept is useful on so many subjects, like in accounts, in FM, wherever you use this concept of average stock. Now, here the x-axis is showing my days, and here the y-axis is showing my stock quantity. Now, on day 1, I purchase in the morning. So my stock quantity is here. And every day, as the day passes, I'm consuming my stock for production. So my stock quantity is going down, 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 and it reaches here in some number of days. The moment it reaches here, I again purchase. So again, my stock comes here. Again, every day as I go on consuming for production, the stock is going down, down, down. So this is my stock graph. So if I have to project my stock positions on daily basis, this is the graph which I will get. Correct? Now, some concepts here. Somebody asked me, sir, what is lead time? And the assumptions are saying lead time is 0, what it is. So let me first tell you what is lead time. Lead time in simple word means time gap. Time gap between or what? Time gap between anything. Lead time is a general concept. You can say lead time for manufacturing means what? How much time it takes from raw material to finished goods. Let us say it takes 12 days to convert your raw material to finished goods. So the lead time for manufacturing or production will be 12 days. In case of cooking, I will say lead time is only 2 hours, because it will take only 2 hours for converting my raw material to final product. So my lead time for manufacturing for, let us say, yesterday's dinner is 2 hours. So lead time is a generic concept. Here we are talking lead time for purchasing. Now, what does lead time for purchasing means? It is the time gap between placing the order and receiving the order. So, I want to buy rice. How is the rice available? The rice is available down next to my building. There is some store, there is some grocery shop. Then the lead time is 0. 0 days. Means what? Here it is not O, here it is 0. There is no lead time. Why? There is no time gap. Whenever I need rice, I have to just climb down, go next doors. I have the shop, I have the mall, I can buy it. But if, let us say, I order online and the app is going to deliver it in 2 days. So my lead time is 2 days. The moment I place order on the app and when I receive. So lead time means time gap. Lead time for purchasing means the time gap between you placing the order and you receiving the material. Now here, when we are doing EOQ, one of the assumptions, we have already discussed few assumptions. Another assumption is lead time is 0. What is that? You can see here. See, observe here. What is lead time 0? Lead time 0 means that I will receive material in my stock the moment it becomes 0. What becomes 0? The present stock becomes 0. Immediately I will receive my fresh stock. Again, that stock becomes 0. Immediately I receive present stock. What it shows? That there is no lead time, because the moment your stock is empty, you go down, you buy rice. Immediately you have stock. Again, you consume that rice over days. The moment it becomes empty, you go and buy. Again, this assumption may not hold good. So no problem. We have answers for everything. What if you're ordering online and it takes 2 days? No problem. You order 2 days before. No? You order 2 days before. so that by the time that 2 days stock will empty, you will receive fresh stock. So even if there is some lag time, you can use this. So this graph is based on an assumption that the moment your present stock is zero, then you receive the next lot. So when is the next lot coming to your doors? Once your present stock is zero. And that generally happens when lag time is zero. So that the moment anything is empty in your house, mother will say, okay, go and get me dal, go and get me this masala, go and get me some fresh vegetables. So lag time is zero. But even if there is some lag time, like in my example, 2 days, you can plan accordingly. The moment you feel that my stock in my godown left is only for 2 days consumption, you place the order so that in 2 days it gets delivered. Now, that is what is lag time zero. I've answered this question. Now, how do I find out my average stock? Please pay attention. My average stock, one simple formula which you have studied even in maths from your childhood days, is opening stock plus closing stock upon 2. Or another childhood formula, you are still a child, but still, it sounds good when somebody is saying that earlier days were childhood, so now you have grown up, but still, you are still a child, at least in this subject. Another formula for average stock is maximum stock plus minimum stock upon 2. We are using this formula here. Now I'm going to ask a very important question. Let's see how many of you have paid attention to whatever I've explained and whatever words I've used. So again, in chat box, you'll answer. For this formula, how much is my maximum stock? How much is my maximum stock? Your annual requirement is 100 kgs. It's good to see that many of you are getting right. And it is also good to see that many of you are falling in my trap. Had many of you been able to see the answers, you would have understood why I said many of you are falling in my trap. I just mentioned your annual requirement is 100. And suddenly the answer that I start getting in the chat is 100. But earlier the answers were correct. What is my maximum stock? Pay attention. In this graph, this is my maximum stock. And when I was explaining this graph, if you have paid attention, I've always been saying, pay attention to the words that I use. When I was explaining this graph, what I explained about this was, this is the quantity which I place order, because how much I receive in my godown, the quantity for which I place order. So my maximum stock is nothing but my order size. That is the first column. So if I decide to place order of 10 kgs at one time, my maximum stock is 10 because my godown will have 10 kgs. The 10 kgs I'll consume, it will become 0. Again, I'll get 10. Again, I'll consume, it will become 0. Again, I'll get 10. Again, I consume, it will become 0. Again, I get 10. So my maximum stock is 10. That is the order size. Then comes the next. What is next? Minimum stock. Again, from this graph, and because of that assumption, the minimum stock is going to be 0. Because once my present stock level is 0, I receive the next lot. Again, when my present stock level is 0, I receive the next lot. So this is the formula. And final formula is order size upon 2. In all books, in all classes, they only say average stock is order size upon 2. But they don't try to explain why it is order size upon 2 only. It is not actually order size upon 2. It is maximum plus minimum upon 2, where maximum is order size, minimum is 0, as you can see from the chart or graph. That is why the final answer for average stock becomes order size upon 2. I hope it is clear to everyone. So my final formula for annual carrying cost is average stock into carrying cost per unit per annum, which is represented by C. And so finally it will be order size upon 2. Now when I extrapolate this in our main equation, where at EOQ level we have said that annual ordering cost will equate to annual carrying cost. So annual carrying cost by this formula over here will become, again, order size here is EOQ. So it is EOQ upon 2 into C. And now, if this is happening at EOQ level, if I continue this further, now I bring EOQ on one side. So here it becomes EOQ square. And I bring all other figures on the other side. So you already have AR into O. This 2 will come here. It will become multiplied by. This C, which is multiplied by, will come here, will become divided. And then finally, I get the final formula of EOQ, which is under root 2 into annual requirement into cost per order, that is O, upon carrying cost per unit per annum. So this is the final formula of EOQ, which we will be using to find out EOQ. Alongside this, this is the formula for annual ordering cost. This is the formula for annual carrying cost. This you will require whenever you will have to make a comparative calculation of total cost at EOQ and total cost at maybe some other level, because there are some discounts or some other changes in your estimates. So when you are finding out total material cost, you have to find out purchase cost plus ordering cost plus carrying cost, which is total. Purchase cost, ordering cost, carrying cost, which is total. At this particular, in this type of question, you will require this. So first EOQ is this, and for finding out independent cost, it is this. Right? You all do one thing, just take a screenshot of this. So there are 3 formulas on your screen: EOQ, annual ordering cost, annual carrying cost. Right? Sure. Anybody has questions, please ask. And also see the chat. In the meantime, anybody has questions may unmute and ask. I'm just seeing the chat. Sir, why have we substituted EOQ in place of order size? Because beta, in that particular case, Umang, we have substituted EOQ in place of order size because that particular equation, that annual ordering costs and carrying costs are equal, happens only at the EOQ level. So at EOQ level, as we saw in the graph, it is intersecting. Intersecting means it is equal. And that is why at EOQ level only, both costs are equal. So when you're equating both the costs, that will happen at EOQ level only. And that is why instead of order size, I've written EOQ. I hope others have also understood. When you get your order quantity, is your max stock correct? Well, that is 0 because it is average. Clear. So let time. So okay, fine. So nothing in chat box as such as question. Anybody has question you want to ask live? Yes, students? No? Great. Now take out your notebooks, take your calculators. We'll do some practicals. Also the sheet which I'm just showing on the screen for solving, that will be shared to you so that you can also do some practice today. Yes, Hardik. Not only BCom, you go and study costing in any other class, but there they only explain the working part. Here we are trying to go to the depth. Thank you, Hardik, for your comment. Okay. Yes, students. Let me now show you the screen. I hope my screen of a PDF is visible to everyone. This will be shared. This handwritten will be shared. But please remember one thing, students. Even if you take my handwritten notes or whatever I'm explaining, try to develop your own. Because my handwritten notes, even though they are in some graphical form or some tabular form, they will still remain a notes only. The more you make it from your own hand, the more you are able to retain. Fine? Now, We start with the practicals on EOQ. First category is basics. Second category is EOQ comparison. Third category is EOQ discount. We will cover each of these, right? Maybe if I have to overshoot the time today, please allow me to do that so that at least we'll complete the first major part, which is more than 50% of your exam questions today itself. Yes, beta, Pranav, as I said, I'll share everything, whatever material I'm using, whether it is this PDF file or the handwritten notes, everything will be shared, right? I'll be posting everything on the portal today itself. Yes, Sunil. Okay, so I give you all 2 to 3 minutes. You have to simply find out the EOQ here. As you can see, the question is very simple. You have to compute EOQ. So I will ask you to solve these two sums. Just give me EOQ. You have to simply apply the EOQ formula which we discussed, right? I'll just take a short break till then. You'll compute this. Okay, I'm sure you all would have got the answers because this is very simple. So let me just put the answers in for the first question. Four thousand kgs. Okay, 2500. Okay. See, simple. What I have to find out in the first question? I have to find out how much is to be purchased at one time. So answer is EOQ because EOQ gives you the quantity that has to be purchased every time, right? Now just I'll solve here. First question, EOQ formula is under root 2 into annual requirement into cost per order upon carrying cost per unit per annum. So what is the Average annual consumption, it is 2 lakh kgs. Price is 20 per kg. This is 16%. So C will be what? 20 per kg price into 16%. It is equal to rupees 3.2 per kg per annum. So 3.2 is my carrying cost and my ordering cost is 50. So it is 2 lakhs, which is AR, into ordering cost is 50, into carrying cost we saw is 3.2 under root. So what is the correct answer of this? 2,500? Yes, great. So many of you all got the correct answer. So it is 2,500 kgs. So in the first case, I should be placing order of 2,500 every time. Now, in the second case, a manufacturer uses 200 units of component every month. Pay attention to everything. But I want AR, so I'll have to find out AR as 200 units into 12 months is equal to 2,400 units or kgs, whatever. So this is my AR. Pay attention to every word because that is where the answer changes. Now, he buys them entirely from outside supplier. That is okay. Order placing and receiving cost. So order placing O is 100. Carrying cost is already given rupees 12. So here carrying cost, we need not do any working. It is already given. So now I find out EOQ with these figures. So for my second question, EOQ will be under root 2 into 2,400 into is 12 and 100. Okay. So ordering cost is 100. Carrying cost already is given. It is not in percentage, so I need not multiply it by price. It is already given as 12. So here my answer is 200 kgs. Correct? So I hope everybody understood this, right? Excellent. Good. Now let us go ahead. Sai, you had raised your hand. I think you got the answer, right? Your doubt is solved. Now we'll go to one past exam question, which is also there in your MCQ. It is also there in your past 2 exam papers. So I find this important. We need to solve this. Whatever I'm leaving in between, you all can solve it for practice, right? And if something is not understood, you can ask me in the next lecture. Now in this, what does the question says? Complete Gardener is deciding on the EOQ for its 2 different brands of lawn fertilizers. One is Super Grow, the other is Nature's Own. The data given is annual demand. This is your AR. This is your cost, ordering cost per order. This is what I need. Relevant carrying cost per bag. So everything is given. I simply need to apply the formula and find out the answer. But here, what are the questions asked? Please pay attention. First, they are asking you to compute EOQ for both. Second, for the EOQ, you have to find out the sum of annual ordering cost plus the carrying cost. So we need to now find out annual ordering cost and carrying cost for each of these items and make a total. And something new. For the EOQ, compute the number of deliveries you are required, right? I want you all to solve it parallelly alongside me. Maybe if you can solve it even before me, that should be great. Now here, I'll just put my answer in a tabular form because there are 2 different materials required. In the meantime, you all can start doing calculations on your calcium and keep the figures ready. So it is Super Grow and it is Nature's Own. Now, what are the different sub questions asked? The sub question number 1 is EOQ, 2 is cost of ordering plus carrying, 3 is number of deliveries. Well, may start computing and posting the answers in the chat box as you get it. So EOQ, again, it is 2 into AR into O upon C. Now in the second part, I need to find out annual ordering cost, which is AR upon, here I'm writing EOQ. Why? Actually, it is AR upon order size, but I'm writing EOQY because we are computing this for the EOQ only. And then I need annual carrying cost, which is what? Order size, which is again over here EOQ upon 2. What is this formula giving you? It is giving you the average stock into C. And then I make a total of this. And then in third part, I need to find out number of deliveries. How? You have to figure out. Okay. Start posting answers for EOQ. Super grow 100. Good, Pranav. You are right. Yes, give me EOQ figures. Super grow. People are saying 100. How much is nature's own? Okay, you all want figures. Okay. Super grow 100. Nature's own is 80. Good. Yes, you are right. So the EOQ is 100 bags, 80 bags. Now I want both these cost. Ordering cost, carrying cost. First for super grow, other for nature zone. Now you already know these formula. You have taken a screenshot also. So now give me the figures of annual ordering cost and carrying cost for each of these items. For the timing, I'm writing here just so that I don't have to change the screen and it may not be discomfort for others. So ordering cost, carrying cost of super grow and nature zone. Aniruddha, I think you have given me answer for the third part of the question. Give me answer for the second part. See, how do we find out ordering cost? Ordering cost is AR upon order size into O. What is AR for super grow? AR for super grow is 2000, which is your annual demand. EOQ we just computed 100 bags into O is 1200. So how much it is coming to? It is coming to 24,000 rupees, if I'm not wrong. Similarly, ordering cost for nature's own is same formula. AR for nature's own is 1280 upon we just computed EOQ as 80 bags into it is 1400. So how much you are getting? It is rupees 22,400. This is the ordering cost for both. Now, carrying cost formula is we need to find out average stock. Average stock is by the formula order size, which is for the timing EOQ upon 2 into C. Now, this is the formula. Now, for super grow, EOQ was 100 bags upon 2 into carrying cost is 480. How much it comes to? 24,000. Similarly, for nature's own, our EOQ was 80 bags upon 2 into 560. So how much it comes to? In fact, remember one thing, we are computing these costs at EOQ only. Since we are computing these costs at EOQ, both ordering and carrying cost has to be equal. And this is, you can see even from figures, your ordering cost and carrying cost is same. Why? Because we are computing this cost at EOQ level. I hope you all have understood this working. Nitish, your carrying cost is wrong, beta. Ordering cost and carrying cost will be same because we are computing this at the EOQ level. I hope you got the right answer, Nitish. Now you all may calculate the third answer also. Compute the number of deliveries per year. Again, this is at EOQ level. Now, if I have to answer this number of deliveries, how will I find out number of deliveries? It simply, in other words, means number of times I'm placing order. See, many times in exams, they make some, what you say, the language is twisted. So institute is also trying to test your, besides numerical ability, your ability to analyze and interpret the question. Because in real life scenarios also, you may be knowing your subject very well, but you should also be able to understand what your client wants. So when your client is asking something or putting some requirement, you should be able to interpret their requirement. So your understanding analysis of the question language is very important. So when they are saying find out number of deliveries, it means number of times you are placing order. The number of times you place order, the same number of times you receive the deliveries. So how will you get this? AR, annual requirement upon your order size, which is over here, EOQ. So for the first case, Supergrow, AR is 2000 and your EOQ is 100 bags. So your deliveries will be 20. So 20 times you'll be getting the delivery. This is in case of first. Similarly, in case of second, your AR is 1280. Number of bags is 80. That is your EOQ. So you will be getting 16 deliveries. Correct? I hope you all have got this question and also the concepts. Yes, students? Anybody having any questions, you may feel free to ask. You may unmute yourself and ask if something is not clear, because now we have started the practical part. The moment you go to practicals, there are so many figures. Many times we are not so comfortable with watching so many figures. It is fine. That is very okay. And there is no problem that even if you have chosen a course like CA, you should be comfortable with numbers. See, CA degree has minimum 500 career options. I'm very particular when I'm saying 500. In today's scenario, you have 500 plus career options. All may not be numerical based. There are many which are analytical based. There are many which are interpretational based. But maybe at this level, firstly, for clearing your exams and getting the qualification, you will require to be good at numbers. It is fine. Work on the numbers, do practice a lot, you will clear. Then maybe if you're not good at number handling, you may switch to those career options which require more of the analytical or the interpretational skills, so that numbers will not always trouble you in the life henceforth. Right? Great. Now I take you to the other category of question, which I have named as EOQ comparison. What is this EOQ comparison? EOQ comparison means, as I was mentioning when I was explaining the concept, now you need to find out total cost, one at the EOQ level and one at some other level, which some other manager or somebody is asking you to do. So here I'll take this question, seventh question. What you are asked to find out what is the total annual cost of the existing policy. What is the existing policy? What they are buying presently before you advise them to do EOQ. And then secondly, you have to tell them how much money they will be saving if they start using your EOQ philosophy, which you have advocated to them. How this will happen? You find out the total cost of existing inventory policy, what they are following, find out total cost of EOQ that you are suggesting to them. The difference is the savings, right? Again, I give you 2 minutes. First find out EOQ and then find out total cost. One at their inventory policy and second at EOQ. And the difference between the two is your savings, right? Sure. Bhavika, it may be challenging. Acha, if I am talking to somebody, others may keep solving. Bhavika, but it may be challenging, but I have seen so many students who have some reasons for doing a job at the same time. See, what is the problem with job and studying is one, your that much time is taken out of your day, which is the most productive time. Second, in the remaining time, you are exhausted, so maybe you're not able to focus so much on your studies. Thirdly, even if you take out time for your studies and let us say you're putting your entire efforts, since you're working somewhere, your thoughts are also occupied with the job, even when you're outside the job. So these things make it slightly challenging, but I can give you hundreds of examples of my past students who have cleared besides being working. Anyways, when you're at final level, you're going to be in job, that is articleship, and plus alongside you will be studying. So that is fine, but if you have some challenges at your personal level because of which job is compulsory, don't worry, it may take 1 or 2 attempts extra, but that is fine. But my recommendation is wherever possible, you have to give full dedicated time at least in the last 2 and 3 months of the exams so that the passing would be more assured in the first attempt itself. I hope, Bhavika, I was able to convey to you. Chalo, I'm waiting for others to solve. In the meantime, anybody has any questions, may post. Similarly, anybody has found out the answer, EOQ or total cost at EOQ or total cost for the existing inventory policy, may start posting. Remember one thing, even if you are going wrong, that is an okay sign, or rather it is a good sign. It means you are using your own heads. And going wrong at the start in a new concept is very obvious. Everybody commits a mistake. So there is no problem even if your answers are wrong. At least you have started looking at the questions yourself. Parvez, your answer is wrong, beta. EOQ is not a fraction figure. What you have got. Parvez, focus on the AR. Your AR is wrong. That is why your EOQ is wrong. Read the question. Hardik, I think other answers are right. There are so many answers getting posted, so I could not keep track, Hardik. You may just repost your answer. Yes, Hardik, you're right. Ranju, you're wrong, beta. Again, I think you have taken wrong figures of AR or carrying cost. Anish, oh, you have directly got the final answer, but I don't recall this is the final answer, Anish. Let me just solve it. Yes, others who have posted are right. EOQ, Anish, I think your EOQ is wrong. Okay, let me start now here. See, whenever I'm showing you some question, immediately take a screenshot so that even if my screen is changing, you'll have the questions in front of your eyes. Now see, read the question carefully. As I said, Institute also wants to develop that special ability of interpreting what other people are saying so that you can interpret your client's query correctly. So a company buys in lot of 125 boxes. So 125 box is their present policy of buying. But it is your 3 months supply. See, now you have to be understanding the language also. So our course is not only targeting the numerical side of your brain, it is also trying to go to the analytical interpretational side. That is, are you able to interpret the language also? So you are buying 125 boxes, which is your 3 months supply. It means what? In 3 months, you require 125 boxes. If you require 125 boxes in 3 months, what is your AR? Your AR will be 125 into 4. So 3 months is a quarter. There are 4 quarters in the year. So this is your AR, which is 500 boxes. Fine. The cost per box is 125. This is your purchase price. The ordering cost is rupees 250 per order. Now again, carrying cost is given as a percentage. I had already mentioned whenever it is given as a percentage multiplied by price, the price given is 125. So carrying cost will be 125 into 20% is equal to rupees 25. So your carrying cost is rupees 25. Right? Now with this figures, we find out EOQ, which is under root 2 into 500, which we just calculated, into your ordering cost was 250 into 250 upon your carrying cost is 25. Correct? So under root of this is 100. Correct? 100 boxes is the right answer. Fine. Now, I have to find out total cost for existing policy and total cost also for EOQ. Now, if you remember that trial and error, total cost is made up of your annual purchase cost, annual ordering cost, and annual carrying cost. I need to find out this for the existing policy. Somebody's mic is on. For existing policy, which is ordering 125 boxes, or the EOQ, which we have just computed, ordering 100 boxes. Now, purchase cost. Till there is a discount in the price, the purchase cost remains same. So I will be ordering 500 boxes annually into my purchase price was 125. So my purchase price is 125. So in both the options, whether I order 125 boxes as per the present policy or 100 boxes as per EOQ policy, this remains same. I hope this is clear to all. So it is 62500, which is my annual purchase cost in both the options, right? Now I come to ordering cost. Ordering cost is what? AR upon order size, which is 125 boxes over here, into my cost per order, which is 250. Again, AR upon order size, which is 100 boxes over here, into 250. So this will be my ordering cost. How much it comes to over here? It is coming to 1000 rupees. How much is it? It is coming here. It is coming to 625 or 62.5. 625, I suppose. Acha, 1250, sorry. Yes, Krishna, you have raised hand, beta. You may ask your question. Annual carrying cost is my order size, which is 125 upon 2 into cost per order, 25. Right? And here, again, order size, which is 100 upon 2 into cost per order, which is 25. So here it will be 1250 only. Correct? How much is my carrying cost here? 156, 1562. Now make a total of these three costs. 62,500 plus 1000 plus this. This is your total cost here. Again, 62,500 plus 1250 plus 1250. So tell me the total cost of the first option, that is the present policy. But annual purchase cost, Neha, is simple. Purchase cost is how much, Neha? How much you are going to place an order, Neha, in the year? You are going to purchase 500. And what is your price per kg or per unit? That is already given in the sum. So it is 500 into 125. So Neha, it comes to 62,500. I hope I am clear, Neha. Right? Great. So existing is 65,000 or 62,000? 65. So you get total cost of both these options. And the savings is how much? Difference between the two, which is 62.5 rupees. Aniruddha is saying, sir, unable to understand AOC, annual ordering cost. But Aniruddha, I gave you formula for annual ordering cost. It is AR upon your order size into cost per order. AR is 500. Order size here is 125. That is what you have planned to purchase. And 250 is your cost per order. Fine. Chalo, I hope everybody has got 62.5 as the answer, which is your savings. See, until unless scenario remains same, there is no discount, no factors are changing, EOQ will always be better than any other option, and that is why it is EOQ. Please understand and appreciate this. So all the remaining questions here are on similar lines. Don't solve question number 6. It is of no use, unnecessary. It will waste your time. You'll solve 8 and 9 at home. I'll be sharing this immediately so that you can practice. Right? Now, let me take you ahead. Another part in this same is EOQ with discount. Now, somebody will say, okay, sir, what difference it will make? One second. Umang is asking, sir, what for are we calculating all these three? What these three, beta? Rati Malini is asking, sir, can't understand. What did you did not understand, beta? Please be specific. Sir, one kind request. If question is posted up and answer solved below, it would be very helpful. It is very confusing. Yes, I'm trying to do that, beta Ramya only. But that's why I'm saying when I'm posting a question, take a screenshot because finding space to solve the answer may not be available. So I may have to just switch. Umang, make your question clear, beta. What for are we calculating these three? See, maybe what I've understood from your question, Umang, is we have calculated the total. We have calculated three figures: purchasing cost, ordering cost, carrying cost. Why? So that we can make a total and find out what will be the total cost if you are following this policy. That is the 125 order size policy or the EOQ order size policy. We are calculating these three because these three are the components which make up your total cost. One is your purchase cost. Second is the cost of placing the order. Third is the cost of carrying the units till you actually consume. So that is with the three costs. We make a total because that is your total cost of that particular option. Why is EOQ not calculated annually? See, EOQ is the quantities, beta Srini, which is calculated, or EOQ is the quantity which you will be placing order every time. So every time you place order, EOQ is not annual. It is the quantity for every order. This you will be using throughout the year till your AR is not complete. So EOQ is never an annual quantity. Annual quantity is your annual requirement. That is how much rice you'll require throughout the year. But out of that, how much to be purchased at one time is the order size. And that is what is the EOQ. So Rati Malani is asking, can't understand, and your follow-up question is the total cost calculation. So what I understand is, beta, total cost calculation, what you have not understood, total cost is what your purchase cost plus the cost of placing the order plus the cost of storing and carrying the goods till it is consumed. This is the total cost relating to material. So purchasing cost, storage cost, ordering cost. Making a total of this three is your total cost. And then we compare the total cost of different options. One is the EOQ total cost. One is the total cost of any other option which is given in the question. Right? Okay. Now, I take you to a further aspect. What is this further aspect? The further aspect is EOQ with discount. Now, if somebody will ask me, sir, what is this EOQ with discount? So till now we were assuming that the price remains constant. We were assuming that this purchase price is constant. But there is a possibility, like somebody had asked initially when I was explaining this, what if suddenly there is a price fall or somebody is giving me a discount? Now, many times supplier will offer you a discount if you purchase a higher quantity. That instead of buying 10 kgs, you purchase 50 kgs at one time, they will give you some quantity discount. So what if there is a discount? The answer is simple. If there is a discount, again, our answer is where the total cost is minimum. So what you will do, you will find out the total cost, one at your EOQ option and the other at the option where there is a discount. So now what will happen if there is a discount? If there is a discount, this purchase price, which was earlier 25, may get reduced to 22. So now your purchase cost will be different at the option where there is a discount. Interestingly, besides purchase cost, another cost that may change because of discount is this carrying cost. Now somebody will ask, sir, how carrying cost can change because of discount? Answer is, if you recall, we have computed our carrying cost, which is generally given as a percentage. How we have computed this carrying cost? I had mentioned this, that you will multiply the percentage given in the sum by the purchase price. Now, if this purchase price itself is reduced from 25 to 22, now your carrying cost will be 22 into 10%, that is 2.2 instead of 2.5. So whenever there is a discount given in the sum and your purchase price is reduced, there is a possibility that your carrying cost, which was originally 2.5, may also be reduced to 2.2, because carrying cost is a percentage of price. Price reduces, carrying cost will also reduce. So whenever there is a discount given in the sum, pay attention. Now what you have to check how is carrying cost given in the sum. Is carrying cost directly given as per unit as we saw in one of the sums, or it is given as percentage of price? If carrying cost given in the sum is per unit, already the sum says carrying cost as per unit, please understand one thing. So there is a discount in the price, but the carrying cost given in the sum is given as per unit. When it is given per unit, it means it has no linkage with your purchase price. Then the carrying cost will not change. So the original carrying cost will continue even for the reduced price, because the carrying cost is already given as per unit. It means it has no connection with price. However, where the carrying cost is given as a percentage of price, which we saw in 2-3 cases, the carrying cost was given as a percentage of price. And whenever it is given as a percentage of price, we find out carrying cost by multiplying that percentage with your purchase price. Now, if the purchase price is reduced because of discount, there are two possibilities. One, still the carrying cost is not changing. You will keep the original carrying cost. Or now, I will say the carrying cost will change. It means it will reduce. Why? Because if the price is reduced because of discount, automatically the carrying cost will also reduce. So now you'll have to calculate the new carrying cost. Now, here, whenever the carrying cost is given as per unit, there is only one answer, no change. However, wherever carrying cost is given as a percentage, there are two possibilities, either still no change or you reduce the carrying cost. Generally, this is the case. Until and unless it is specifically mentioned in the sum that do not change the carrying cost. So this is something which is important, which you need to keep in mind, which you need to understand. I hope this concept is clear to everyone. Clear. Okay. Now, if this is clear, we go to questions relating to this. Now, here we are going to take questions where you're also given discount. Now, just computed some figures. Now, here I have taken multiple questions just for practice, but I'll take one or two to explain you what I was trying to explain. So a company requires 20,000 units of material annually. So this is your AR. Purchase price is rupees 20. Ordering cost, that is O, is rupees 50. And carrying cost is given as a percentage. Now, whenever it is given as a percentage, we compute it by multiplying it by purchase price, which is 20 into 10%. So it is rupees 2 per unit per annum. Right? Now, find out EOQ, find out total cost at EOQ. Now, EOQ is simple. It is 2 into AR into ordering cost upon carrying cost per unit per annum. How much is EOQ? Can somebody give me the EOQ figure? 1,000. Hardik is saying 1,000. Anju, 1,000. Hasi, 1,000. Satish, Umang. Okay, so it is 1,000. Fine. Great. So EOQ is 1,000 units. Now let us find out total material cost at EOQ. How do you find out total material cost? It is your annual purchase plus annual ordering. How is purchase cost computed? AR into purchase price, right? So I'm finding it out for EOQ. How much is your AR? AR is 20,000 into purchase price is 20. So it is 4 lakhs, right? So AR is 4 lakhs. Annual ordering cost is AR upon order size into O. Carrying cost is order size upon 2 into C. Okay. Give me the annual ordering cost for EOQ. Give me annual ordering cost for EOQ. 1,000. Carrying cost is also 1,000. So my total cost is 4,02,000. I hope everybody is getting this answer. 4,02,000 is my total cost at EOQ. Yes. No questions, students? Super. Now, what is my next question? You have to find out total cost for the present policy. What is the present policy? How much they are ordering? They are saying presently purchases are made quarterly. So when you are making purchases quarterly, it means AR divided by 4. So your present policy is your order size is 5,000 units. Now give me total cost for present policy. Now you're ordering 5,000 units in present policy. So your order size is 5,000 units. Please remember, students, your purchase cost remains same because you're still going to order same 20,000 units at the price of 20. So purchase cost is 4 lakhs. Only what will change is your ordering cost and carrying cost because now your order size is 5,000. So give me the ordering cost and carrying cost. Yes, Preeti, immediately after this session, I'll be uploading this PDF. PDF means I'm sure you're talking about the questions PDF. Yes. Chalo, give me the ordering cost and carrying cost. Satish, what is 200? Ordering or carrying? Specify. Ordering cost 200. Carrying cost 5,000. So this is now 4,05,200, right? Now I come to this D part. Now you have to find out total material cost if supplier is offering 1% discount on present purchasing policy, and there is a common question, assume discount does not affect carrying cost. So I'm answering this. What if supplier is ready to give you 1% discount on the present purchasing policy? Present purchasing policy is 5,000 only. And further, they are given that the discount is not affecting carrying cost. It means carrying cost remains same. Now, with the present policy, 5,000 units, but with 1% discount. There is 1% discount in price. Now what will happen? This purchase cost, which was constant, will reduce because you have 1% discount. So your price will reduce by 1%, because of which your purchase cost will also reduce. So now my new purchase cost would be 3,96,000. I hope this is clear. Because 1% there is reduction in price. So my overall purchase cost will also go down by 1%. Right? Ordering cost, carrying cost for the time being remains same because my order size is still 5,000. Ordering cost will be 200. Carrying cost is also same. Why? Because they have said that assume that discount is not affecting carrying cost. So now here in this option, my answer is 4,01,200. Yes. Now, I've made a question 10A, which asks you what would be your answer in the above questions if assumed discount affects carrying cost. So, this answer which we computed, answer D, I'm repeating this answer D in 10A. So 10A, answer D. What is 10A saying? You have to recompute all these answers A, B, C, D, E. Out of this, you have to recompute this with the assumption that discount is affecting carrying cost. It means now your carrying cost has also to change if there is discount in price. So I'm repeating the same D. Now what is same D? Present policy. So you are ordering 5,000 units and there is 1% discount. This is your option D. But now there is a change which says discount affects carrying cost. Now, what is my purchase cost? Purchase cost is 396. Original purchase cost was 4 lakhs, reduced by 1%. Ordering cost is 200, no change. But now my carrying cost will change because if there is discount in price and it is saying it affects your carrying cost, it means my carrying cost has also to reduce by 1%. So now in this case, my carrying cost, which was up till now 5,000, will become 4,950 because it will also change because of that discount of 1%. And I will get a new total cost, which is this. I hope students, you are understanding the difference between discount affecting carrying cost and not affecting carrying cost. Students, any question with this concept of discount affecting and not affecting carrying cost? Perfect. Is this clear? Right? Super. How do I get 5,000 units? But I read the question. Question says you are placing order quarterly. Now your annual requirement is 20,000. If you are placing order quarterly, so 20,000 divided by 4. So 5,000. Neha, you have asked how to present the answer. The answer is to be presented in the same fashion. We'll show the same tabulation where my first column. Second, I'll show you. See, I'll make the same type of table where my first column is the option. The second column is my purchase cost, ordering cost, carrying cost, total cost. So you do this for all the options given. It is the same table, if you remember, of my explanation where I was explaining Neha. Let's see. Same. Order quantity, purchase cost, ordering cost, carrying cost, total cost. So this trial and error format remains constant, Neha. I hope I'm clear, Neha. Yes, Aniruddha, you have raised your hand, beta. Right, I have answered how to get 5,000. I've answered how to present answer. Then somebody asked me, please explain again discount affecting. But what is discount affecting? It simply means that, see, that is why I've done these two workings parallel. One is D from original sum and again D from 10A. What is the difference? In both, the quantity is 5,000 with 1% discount, 5,000 with 1% discount. But 10A says that assumed discount is affecting the carrying cost. Affecting means up till now carrying cost was 5,000 only. But if they say discount is affecting carrying cost, so discount will also reduce the carrying cost. Because of discount, the price reduces. So also the carrying cost reduces. This is what is discount affecting carrying cost. I hope I've answered your question, beta. Sunil. Sir, in real life scenario, which is more suitable for company, discount affecting or not affecting? Srini, remember one thing. There is no such what is more suitable. It is what is applicable. So in my case, if my carrying cost is linked with price in such a fashion that price changes, carrying cost changes. Example, I'll give you. If you remember, my carrying cost is made up of interest component. Now, if my interest component is stronger in my carrying cost, so definitely if my price reduces, my investment reduces, interest also reduces, and that is a major component of my carrying cost, then my carrying cost is affected because of discount. But if my carrying cost is majorly made up of the warehousing cost, where the warehouse person has nothing to do with my price. So even if I'm getting discount in my price, he is charging me on the basis of the quantity which I'm storing. In that case, Srini, my carrying cost is not affected by the change in the price because it is majorly made up of the warehousing cost. So it is rather than suitability, it is about applicability. And that is why you have so many options, because it is not your choice. You'll select what it is you have to check what is applicable. Fine. So I think we'll stop over here because there are too many things we discuss, so many concepts, so many workings. Tomorrow, I'll continue from here. We'll take some special cases of EOQ and we'll go to stock level, which is the second most important concept in the material chapter. And then we'll go to the remaining theory pointers, whatever are there in this chapter, and majorly we'll complete the chapter. Not tomorrow, sorry, day after tomorrow, right? So I hope Nitish, you'll be getting the PDF from your portal only. I'll be uploading on the portal right away. You can download it in next 10-15 minutes after this lecture is over. Fine. Excellent, students. Anybody having any further questions? Do one thing. If you want to ask, you may unmute yourself and ask. If anybody is in the state, please show your video. I would be happy to see your faces. It will also help me establish a better connect with you all. So if somebody can put on the video. Yeah. Hi, Arif. Good to see you. Hi, Satish. I think you all are mute. Hi, Parvez. Can we just unmute them? Allow them to unmute.
Good morning, sir.
Very good morning to all. It is excellent
Good
to
morning,
see.
sir.
Sorry.
Good morning, sir.
Very good morning, beta. Yes, it is excellent to see so many students getting up early, working hard.
Hello,
Yes,
I am audible, sir.
you're audible, beta. Only I
हाँ,
don't know whether you have put on your video,
सर
but you're audible. Tell me.
क्वेश्चन नंबर 7 के अंदर आपने 4 मंथ्स क्यों लिया सर? एआर
किसमें
जब
बेटा?
क्वेश्चन नंबर 7 में एआर
हाँ,
जब हम एआर कैलकुलेट कर रहे थे तब 3 मंथ्स दिया था, लेकिन आपने 4 मंथ्स कैलकुलेट
4
किया
months
सर.
नहीं लिया बेटा, 4 months नहीं लिया, 4 quarters लिया. See, that
अच्छा,
was your 3 month supply. यानी 3 महीने में अगर आपको उतना लग रहा है, तो साल पूरा कंप्लीट होने के लिए 3 महीने into 4 quarters आएगा ना. So 4 was the quarters बेटा, not months.
ओ थैंक यू सर. यस
Yes. Hello, Chetan Moni, right ना? Or is it? Okay, great. Yes. Anybody has any questions? Anybody wants to discuss something? We have ended our lecture, so we can just have a candid discussion. Hi, Bhumika. Hello. Yes. Anybody has any questions to put? Yes. Hi, Anish. Any questions, students? Any doubts? Anything you want to share, you want to discuss, you want to ask? Sir, which chapter has max weightage? Preeti, but there is nothing like this. Our institute has this special knack of revolving the weightage. But yes, material has a good weightage, it being one of the major components of cost. It has a good weightage. So I think weightage was explained in the first session also. Sir, is theory important in cost? Hardik, beta, the theory, there is one specific question on theory, and it is generally an optional question. So if you are good at theory, I would request that you all should work on the theory questions also. Hello, Ramya. Yeah. So it will help you score marks whenever, let us say, practical is not working for you. I'll
Good
be
morning, sir.
uploading all this question. Good morning, Ramya. So there will be more questions for practice, beta. So no problem. You can just Vaishnavi get it from our, in fact, our module is also may having questions. Sir, how much time, sir, stop working? How much time, what? I didn't get your question, beta. Vanita, how much time? COMP. I didn't get. Yes. Yes, Satish, please go ahead. Ask your question. Satish, any questions, beta? Where I will get this question PDF? On the portal, beta. Yes. Portal or app? Noruddin, I don't know this. Maybe a technical person can answer this, whether it is on portal or app. Satish, you have raised hand. Any questions, beta? No? Good. Yes, yes, please go ahead.
Graphical method also graphical method.
Sorry, you are not clearly audible. I'm not able to hear you clearly. You're not audible, beta. If you can type, it would be better. Anybody further questions? If you can answer queries from BOS app also will be very much helpful. Srini, the problem is shifting to multiple apps will be difficult for me also. So I request that, see, I can go to the app also. Let me check. Hi, sir. Can you see my text? Acha, Omkar has put, sir, please explain cost control. Oh, there are so many questions here also. Acha. See, the problem only is switching between different screens would be a bit more complicating. I am sure everybody is able to post questions even in the chat, but still, let me take questions. But I don't know whether now these people are there. Some questions over here are more questions based on some technical part, like how do I find the link to join classes on Zoom? Acha, so everybody is not on Zoom. Acha, that is why people are putting questions here. Okay. Oh, acha. Sir, costing is not only in manufacturing concern. Sir, we are discussing in respect of manufacturing concern. Okay. Okay, I'll have to do something for this. I'll work out something. I was not knowing that people are not joining lead from Zoom. Okay, no, graphical method, Satish, is not a question asked in exam. I gave that method to make it understandable, right? So there is no such thing asked in exam about the graphical method. Only the working and solving is to be done, what we did just now, right? Okay, so I also had great fun. In fact, I was eagerly waiting for the second session after the first one. I'm sure everybody has the same wavelength. So definitely we'll connect again day after tomorrow, and we will take ahead with more interesting concepts. We'll deep dive into many of the aspects, right? And I'm sure it would be an enlightening session for everyone. Yes, somebody has put live class link. So, but I think they are on the app and they are not getting the Zoom class link. I'll request the technical team to please share the link on the app
The
to
Zoom
people
link
who
is
are.
mentioned on the announcement.
Acha. How much time should I allocate to answer this type of questions? But it should be up to 8 minutes, maximum 10 minutes. But anyway, see what happens many times. Very important point I'm saying. Many times we all strive hard to complete the paper in that, and in that pursuit, you may end up making blunders in your answers. So don't do that. First check, are you very good at numbers? If you are very good at numbers, then only you should go for speed. If you're not someone very good at numbers, then I will say attempt at first completing 80 marks thoroughly well, because you need 50 plus marks to pass. Actually, you need 40, but I'm saying 50 so that average is also done, and it is very much possible. See, depending on your skills, your target should be between 80 to 100 for completing. How to manage time for both groups better? It is more about planning. I think you first continue alongside our classes, and also at the same time, prepare a schedule for self-study. Now, since this is the initial part, you all are still going to get more accustomed to the conceptual part. So in the meantime, what you all can do is you all can go to the more theoretical aspects like your laws, and you can also maybe start reading audit, where you do not maybe require immediately class assistance. Whenever those classes are happening, you can raise your doubts. So right now you can pay more thrust to the theory part, even from taxes, and practicals maybe you can do alongside the class. And whatever theory you all are studying from your end, maybe you can ask the questions whenever the theory sessions are going on in the class. And then most important, as the time progresses, you have to then shift your thrust more on the practical aspect, because you require more practice over there. And theory should be like a repetitive thing where you keep on repeating whatever you have studied earlier. Most important, identify your skill sets, whether you are good at numbers, whether you are good at learning, and then accordingly, you have to plan your passing as to how you'll fit the passing in that. Those who are good at both and those who can go give more timing should definitely aim for scoring and even getting rank, which is very much possible. You do not require to be any superman or extraordinary superwoman to get into rank. It is only about systematic and focused study. Fine? Great. So we conclude our today's session. We'll meet day after tomorrow with the remaining concepts in materials chapter. Till then, goodbye and happy studying and deep dive studying. Bye-bye.